Yes. Okay. Okay. Yeah. So not a good start for the class. I think there are a couple of folks to join. So let's wait for a few minutes. I think though we are already late, but I think the number of participants is uh, 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 uh. So in the meanwhile, let's discuss this. What has happened? We were supposed to join by 6, but now it's 6:16, and there was definitely a technical glitch. And now I think that this is resolved, and most of us can now join. Uh, Good evening. Good evening. Uh, so actually, this is a very good business and strategy, business and technology concept if you consider it. Uh, why and how? Because many businesses are dependent on technology, and this is something that we are going to definitely learn later on, like when the emerging technologies chapter will come. So we'll definitely discuss this. Good evening. So basically there we will be discussing like how basically what are the challenges businesses face when they are dependent on technology, or basically okay, Ansh, you missed yesterday's class. No worries, no worries. Basically, see, I would not go into too much detail. I would do a quick recap of what we did yesterday. In case you want to see, so I think there would definitely be a lectures available to you, so you can actually refer that. I'll basically go for a quick recap of what we did so that we can revise. So what I was saying is actually what has happened today is actually a good business and business and technological concept which we are right now studying. So we will discuss like what are the challenges, like there could be some technical glitches and the business could get affected from that, and that is actually really interesting that we are right now experiencing it. So nice. I think i think we can start now. The number of participants is okay, so let's start. Okay, other than I think, is there anyone here today who basically who's attending this as a first class? Like I know Ansh has mentioned, but other than him, is there anyone else? Okay, hello Joy, welcome to ACCA and welcome to Business and Technology. Uh, okay, I think so. Let's have a quick recap of what we did yesterday, and then we'll basically jump to uh, what we are supposed to do. So just a quick recap. So first of all, we just had a quick discussion. I hope you guys all can see my screen. Let me know if not. I'm just expecting you guys can see my screen. Yes, okay. Somebody said unmute. Saga, can you hear me? I think uh okay. We get access to recording of the ongoing sessions. Yeah, I expect the recordings to be available like after the session is over. I think that will be available to you guys like later on, so that you can check with VG team like when the recording sessions will be available for you to watch. Okay, so let me see, where is my cursor? Just a moment, huh? This is actually taking a little time. Sure, why it has happened. I have tested it today. It was not supposed to hanging it. Not sure. Mm, okay, no worries. We can always use the books. So basically, let me just quickly recap what we did. So yesterday, what happened? We actually discussed. We started discussing about like what is an organization, and basically why organization exists. We basically discussed. Just a moment. Something is going on here. Let me open the PPT here. Yeah. So we basically discuss like what organization exists, and what basically consists like individual efforts, like how individual efforts can gain synergy when they are combined. So that's what we discussed yesterday. And also then the type of organization that actually we face. We actually also basically saw I actually told one example related to like needle, like how basically making a needle, it requires couple of individuals and then only we get a final output. And we later on discuss like the objective of the sorry like objective and goals of the organization, like how basically when organization at small level, how basically some individuals like small entrepreneurs basically do all the task. And then once the organization start expanding, the specialization part comes, and then there's a standardization and good performances. Standardization basically means once you basically achieve specialization, so you perform the task better than other individuals which is not specialized in that area. So you basically create a standard, and then basically this basically creates a good performances. And then there's a formal system and process and documentation whenever there's an organization. So they are going to be less informal basically activities as compared to formal activities. And the larger the organization, the higher level of documentation and formality you will see in any organization. When I say formality is basically like we were just discussing in this class, that there's a certain set of rules which we are supposed to follow. Like they are not mentioned but still we are supposed to follow. I actually gave an example of peon. Like a peon is supposed to attend his office, like there's a timing he will be attending the office, and all that, like the attire that he basically wears, the task that he will be given. So there are basically standards and documentations for that, like what tasks will be done by somebody, and like what are the policies to be followed. And then we also discuss like about input material and labor and manpower. Is it working now? No, it's not. Like simply yesterday. No worries. I think I have shared the PPT with you guys on the WhatsApp group. So no worries. Let's see. It worked yesterday, so I am expecting it will work today as well. Uh, just a moment. So later on, basically, we went ahead and then we started discussing about like different types of organization. Like there were the organization about commercial, not for profit, like trade union, and there were some organizations related to no, basically NGOs, non-government, and there was some question about public sector, private sector. So we were just discussing all those things, and we'll be just continuing that discussion from here. So I'm just logging in. Let's see whether this one works. So in the meantime, I can, is there any chat? So company and business organization are same or different? Company and business and organization. So business organization. Company is basically one of the organizations. Okay. Synergy, okay, Kritika, basically synergy means, let's say I actually gave one example of painting a wall. Basically there were two individuals, like let's say one is you and one is me, and basically let's say I'm good at mixing the paint and you are good at basically painting the walls. And then basically we perform individual tasks, like you try to paint your wall and I try to paint my wall. So the efforts and the the time that it will take will be larger than if we combine together. Okay. So that was the basically example I gave there, that if I basically focus on my skill on basically mixing the paint, and you basically focus on your skill on basically painting, so that basically combined effort will basically create a output that would be best, that would be better than what we would achieve individually. So that is basically a synergy effect. So synergy is something that we, when we combine our effort together, when we do our specialized work, and basically segregate the task that we are required to do, and basically performed by the person who is actually good at it, so they will create a synergy. Okay, let's close it. I think this would actually take time. Please shut down, please shut down. I think if I just close this one. Not sure why does this happen every time. Then just close this one. Let's log into the books now. Once it is loading. So we'll start with the how organization. So we were just having this discussion about the like the ownership and the like about the private organization that is owned by government will be a public sector, and any organization that is not owned by a government will be a private sector. These are sectors. Basically, do not confuse it with the public and the private company. Like we were discussing yesterday, somebody asked like what is the difference between public company and basically public company and public sector. So these are two different things. Public sector means it could be an organization, it could be a company where government has basically has stake in that. And a public company basically is a different thing, which is basically a company which is either private or public. Public means you can basically ask money from the public, and in case of private company, you basically only the individuals that has stake there will be basically they only can invest in the company and no individual outside. Okay, so except in the meantime, let us just jump onto it. Okay, so we were just discussing all these points like variety of objects, organization, and we also discussed like we were actually discussing these points like private sector versus public sector. Now we will be discussing like the second point. I hope till now everything is clear. So we'll now be discussing this control, owners versus manager. Okay. Uh, Let me know, sir, schools or hospital come under public sector because most of the time, most depends on who's owning it. Like as I mentioned, schools and hospital mostly are basically owned by governments. Like government basically create charitable trust, and they basically have the stake. Okay, the voice is breaking. Is everyone facing the voice issue, or is it just Ansh? Let me know. Is my voice okay? Let me know if it continues, then I'll see what I can do. No, now it's clear. Okay. So basically, like schools and hospitals, that depends like who's owning it, right? So they could be private schools, like they charge a lot of money, but there could be public schools which basically are owned by government, where basically the fees that is charged to a student is very less. So that is basically depends on an organization can be public or private, basically depending upon who's owning it. And as I mentioned, public sector will only be those which is basically owned by the government. And if government does not have any stake in that, then that basically means that sector is basically owned by the private. So, okay, so that becomes a private sector. Now the control. So control basically like the ownership, and basically if you see this owner versus management, this is actually very interesting because we are very soon after this topic we are just going to read about what is a limited company, and there we will be understanding like how the company is owned by different individual and then manages by a different individual. How many of you know actually what is a director of a company? Anyone? So anyone? I think. Am I audible? I'm not getting any messages from you. Yes. Okay. Yeah. Yes, Shivraj. So basically, what I was saying, like the ownership versus manager is basically one thing where the owners are different from basically the private BOD, board of directors, right, Raki. So basically the owners are different individuals and the person who basically manages the company is different. And that is very interesting because what we actually discussed like with the example of, small entrepreneurs, they basically manages everything and they start expanding and they also own their business. And we also discussed like why the many businesses remain small, because they feel the risk that he or she should involve somebody else in his business. There could be a risk. But once the business start expanding now, so there is a concept that business should be managed by those who are basically good at managing. And let's say I have money, okay, but I am not sure like how to run a company, how to run a business. That can be done by an MBA, like a professional who's basically understanding the business concept better than I do. But I do have the money. So in that case, what I'll do, I'll have the ownership in that business. But that business will be run by a different entity. and basically different person, sorry, when I say different person, so that is basically a concept of a company, a limited company. So we'll be soon discussing, but that can also be applied to like other organizations, like we discuss in case of charitable trust, like school. Let's take an example of school. School is basically governed by a trustees. School is mostly schools or hospitals are run by trustees in case of public sector. Okay, but they are basically managed by different individuals. Like in school there will be a principal who's managing the entire school, but he's not necessarily the owner of the school, right? So they are individuals who basically manages it, and they are individuals who basically owns it. So these two can be different in different basically entity or persons. Okay, I hope this point is clear. Let me know. Okay, nice. So yeah, we have discussed this activity about manufacturing and service sector. Like I actually have some good points which I wanted to discuss with you. So I'm just referring the PPT that I have opened. I'll check like in the meantime that I can open the PPT here also. I'm not sure, like it was working just few minutes ago. Not sure why it actually, I think something related to like sharing the screen, some issue is there. No worries. So basically I'll be discussing the points, so don't worry about that. So basically what I was saying, like manufacturing versus services. So I think somebody mentioned CEO, manager, and investor and owner. Very well said, Shivraj, for the ownership and manager part. Now let's focus on the manufacturing versus service. So manufacturing and services, I think somebody mentioned about the tangibility, because manufacturing produces, so it produces something that is tangible, that can be touched. Okay, perishability. Perishability means like how long the product is going to last. Depend on the sector to sector. When manufacturing is producing, some product lasts like years, like a machinery, like a laptop, a table, like furniture, like buildings. Okay, they are builders. They are basically products like mobile phones. So everything has its own life. But in case of services actually are basically, there's a word called heterogeneous, simultaneous. Basically once you are receiving the service, you are just experiencing at the time the person who is providing the service. So there's a term in service, one cannot separate production and consumption activity. Yeah, true, Shivasha, that's very well said. So basically that's the difference between manufacturing and service. We actually discussed it in a detail yesterday, but I'm just discussing like the headers, which basically are feature basically of manufacturing and services, like perishability, production process, like we just discussed how this cannot be separated from production and consumption. Then there's a time frame of delivery, like services are delivered on simultaneously when they are performed, whereas production or manufacturing is done at a time, and then the end result basically reaches to the end consumer at a different time. Like there could be gaps, and depends on which product we are referring. In case of let's say a soap goes through a multi processes, and then when the final output comes, that actually basically delivers to the final consumer like you and me, that basically takes couple of days, like months, to actually reach us, because the manufacturing is started like a long time back. And also in case of like I think this is just an example, so take it as an example, like the alcohol basically take years to manufacture. That is actually very interesting. That actually depends on like which alcohol you are referring, but some alcohol actually takes years to actually manufacture, and when the final output reaches to you is basically at a different time. So that actually basically time frame, like the perishability and like the tangibility. And then there's a supply chain management, but I'll not discuss the supply chain management right now, because we have a separate topic for the value chain. We'll be discussing that there only. Okay, so I think the manufacturing versus service part is clear. Profit versus non-profit oriented. So profit versus non-profit oriented, because we are going to discuss about the non-profit organization very soon, and we are also going to discuss about non-government organization. So I'll be just touching that point. Like for the time being, what I can say about profit versus non-profit orientation is like, when I'm running a business for profit purpose, so my main activity, my main goal is to earn the profit. But when I'm a non-profit organization, so my main aim is not to basically earn the profit. The if I earn the profit, So that becomes incidental to my activity. It is not necessarily my main activity. But also do not confuse this that non-profit organization do not earn profit. This is the misconception that non-profit oriented business do not earn profit. No, they do. They call it as surplus. Okay, but their main task is not to basically earn profit. They can basically earn profit, but this is not their main task. Welfare of people, NPO, yeah, we will discuss like because there's this term like NGO, non-government organization. We'll be discussing like what is the difference between an NGO and what is the difference between an non-profit organization, right? Now, limited liability and partnership, again, this point has come. So let me just quickly cover, because limited liability is an entire concept in itself. Okay, so limited liability and partnership. Partnership is like basically I'm not sure like why they have written like the legal form as partnership. There could be a sole proprietor also, but limited liability is very interesting concept, and it's actually very practical thing if you understand. Like is anyone know like what is a limited company? I think you have done your, if you have done your schooling from a commerce background, so you might have heard this term of limited company. Okay, like you will be hearing like limited company. Let's say if I talk about India, there are many companies with the end name as limited company. The Reliance Limited, or basically one owner have unlimited liability, others have limited. Very well said, very well said. Actually, I think you have actually read it. So we'll be discussing like why and limited company is actually required. Why a limited company is actually required. A company whose owners only have to pay a limited amount of its debt if it fails. Very well said, very well said. Rightly said, Raki. That's a very good point. And actually, I'll actually give you one practical example of why limited companies required, and why actually limited company concept, how did it actually came into. So this is a very interesting concept that we are going to cover very soon. Let's discuss about the small organization versus small medium size enterprise versus multinational, whose owners are legally responsible for its debts. No, I would not say that this is a correct definition, because private company or public company, both are responsible for their debt. Even if you are not a company, if you have raised some debt, basically you have borrowed some money for basically for any purposes, even your personal borrowing, then you are always responsible for your debt. So I would not say that that is a correct way of saying it, but I'll try to help you in understanding like why we have a limited company concept. This size basis, like since yesterday we have been discussing like what impacts the size of an organization, like a small like the nature of small businesses, like how it is basically mainly run by a sole proprietor, or basically family person, or very small group. Small businesses are basically very limited businesses, and very small few number of individuals are involved there. And then there's a medium-sized enterprises, and then there's a multinational. So multinational, basically, those who don't know, I though I expect that every one of you might have heard this term, multinational organization has basically means that has basically a business in more than one country. Like my in case the company that I am right now working is basically based in France, but it has business in Germany, it has business basically in UK, the like all the country in Europe, some of the business in the US, some of the businesses in India as well. So it is basically multinational company. Basically, it has multiple companies registered under same name in different countries. Okay, so this is basically the size is basically like at what level I'm basically operating. I can, is it the same as franchise? Yeah, very good question. Franchise is actually basically you can say multinational company is quite different. It's slightly different from a basically multinational franchise. Franchise is basically a very interesting concept. I may not see. I do not have to be registered in a country to to perform its business. To perform a business in any country, I do not have to be registered. I can only be registered in India. Let's say I am a let's say TCS. TCS is registered in India. Okay, but it can perform its business outside, because why I took the example of TCS. TCS basically is one of the largest exporter of service in India. Okay, so basically they do business many country at one time. Yeah, that also is done in the franchise also, Sagar. That is also done in basically in franchise. If you understand the question, franchise and multinational company has a very small difference. Company having country and yeah. Uh, 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 that is very near. That Sankal, that is very near. Let me just clarify. I think I'll just help you understand. See, whenever any company that is registered in a country, let's say what I mean by registered, basically registered with the registrar of company. Okay, so I am currently registered in India. Let's say I open a company and I'm registered in India. So I will be basically called an Indian company. But if I go and register myself, let's say in UK, okay, then I'll also be called a UK based company. But if the money that I have invested in the UK company is basically coming from India, like the 50% ownership, like the 50% or more of the company's ownership is coming from India. I have basically created a business in India. Now I have so much money, but I feel that the competition in India is high and there's a lot of opportunity in UK. So I take my money and I go to UK and start a company with the name of the same company that I had in the India. Okay, so in that case, I will be basically I'll come Shivraj on that. So basically in that case, I have basically ownership in that company that I have opened in the UK. So the company that is in India is a parent company. See the word parent company, and then I have basically multiple companies in other countries where mainly I have the stake there, and then rest stake can be basically done by the local people, like local investors of that country. But that basically depends on the FDA rules, like foreign direct investment, that we'll be discussing later on. So there is a foreign direct investment rules that we have to understand, but other than that, we'll be a multinational company in that case. Now, franchise, why franchise different from like multinational company? Franchise can also operate in multiple countries, like McDonald's. You have heard like word like McDonald's. McDonald's is basically operate in multiple countries, but it is not necessarily though McDonald's has registered companies in many countries. But let's say McDonald's has only one registered company in their homeland, like US. Okay, so in that case, McDonald may not necessarily be a multinational company. It can be a multinational franchise. Okay, so whenever you have a registered company in any country and you have a parent company basically sitting there, so that always makes it a multinational company. But in case you do not have any basically separate legal entity, that we have actually, I think we have to discuss the separate legal entity, only then you'll be able to differentiate. Company have the same name in different country? No, it's not necessary that a company can have that the same name, or they can have a different name. They can basically apply for the same name, but they can have different names also. Like that actually basically depends with the registrar of the company, like whether they allow it or not. But yeah, the multinational company can have, like different names. Like you can basically I'm not sure, like if you have heard like Coca-Cola also have a registered company in India as well. So they basically go with the same brand. So okay, so no worries about that. So basically franchise is different. So I think I'll first introduce the limited liability and separate legal entity concept. Then I think the franchise versus multinational concept will be more clear. Basically, whenever you registered as a a different company, so that basically makes it a separate company, though maybe owned by a same individual, but that basically makes it a separate entity. So we'll be discussing a separate legal entity concept and limited liability concept very soon. And I hope that will basically clear the franchise and multinational company confusion there. Okay, so let me know, in other than these 2 points, is there any other question? We'll be just soon discussing this multinational company in a little bit more when once we are discussing the limited liability concept. I think that will basically help you understand this. Okay, the source of finance, there is another category that organization can differ, like source of finance. Like public and private company would be a good example. Like public company can raise money from public, like private company has a limitation that it can only raise money from maximum to 200 individuals. What I recall from the as per the Indian's law, like the India, as per the Indian law, the Indian company law, you can basically raise funds maximum up to 200 people. If you raise more than if you raise money from more than 200 people for the ownership, like shares, then you will basically need to declare yourself as a public company. Okay. And then there is bank. Basically, many banks invest in companies, so there could be borrowings and government funding. Can anyone tell me like why government would fund a company? Hello. For development? Yep. Yep. One of the reasons. Basically, government funds any company for the purpose of for public welfare. Yeah, that's a very general term for public welfare. Basically, government sometimes invest in company like sometimes there's a monopoly, like oil, oil, or let's say railways. So these are some of the monopolies. Yeah, basically welfare of public is basically a very general term, but specifically we have to see like which sector we are referring to. In terms of, let's say, railways, railway is a monopoly of government. Okay. Railway is not owned by any private institute in India. Okay. So that depends on like in case of I think oil is would be example, because now the pharmaceuticals company is now privatized. So I think the and banking is also privatized now. So basically railway would be a good example for basically uh, to basically understand that they are sometimes case of monopolies, or sometimes there's a case of incentivizing, that sometimes government incentivize some industry. So in that way, that government also invest, like in case of you have heard like electric cars. There's also a concept of hydrogen related cars, like the hydrogen fuel based cars. So in that also government is incentivizing, and also government is trying to invest in certain companies to basically encourage that particular industry. So there is also a case of government encouraging any particular industry, and we have a very detailed discussion about what's government role on businesses, like how we can assess like what strategy we can apply considering the decision making of the government. So that we are going to discuss later on. Okay. So in terms of technology, some businesses like let's say let's talk about Zoom. We are right now attending this class on Zoom. Zoom is basically an online platform, and that is also a registered company. So Zoom is basically entirely based on like technology. But let's say any organization that is not using technology, that is very difficult to understand these days. Like, is there any company left who's not using technology? Will government invest if company is too big or too fall? No, they see investment decision is very subjective. Why government is investing, like a company is too big to fall? Let's say SBI. SBI Bank is basically a largest bank of the of India, and government has a lot of stake in SBI. So you cannot say like government will be investing in any company because it's too great to fall. No, no, it's not the case. Government invests money based on many factors, considering many factors. So we were just discussing about technology, like complexity of production. So technology is basically, let's say, I would say Zoom is a good example. Like you can say WhatsApp for Facebook, or there are many techno driven companies like right now, why I don't know, like Apple is a good example of techno driven company, like a technophile company which is basically based on technology. So yeah, there are many organizations that are based on technology. And like production, complexity of production. Okay, so have you heard like robotics? Anyone, if you know that sooner or later, that I think you might have heard that there's an AI concept is going on. We'll be discussing that later on in the emerging technologies. But there's a concept of robotics, that chat gpt, yeah, chat gpt is different, but that is basically artificial intelligence. What I'm talking about is robotics. Robotics is basically manufacturing of let's say cars by the machine itself. Boston is a good example. Yeah, Shivraj. So basically the complexity of production and use of technology will basically depend on the organization that it's using. Okay. So I hope these parts now are clear to you. Anyone have any doubt in that, in these things? I'll be, will yes, Tota. Okay. Anyone? Who's not basically able to understand anything? Any doubt, or should we go ahead? In the meantime, I can try to reopen my PPT in the background. Okay, I think we are good. So let's move ahead. We have already discussed these sectors. Like yesterday we were discussing like what is the impact of each sector, and basically there are numerous sectors. We were discussing like aviation, energy, and some of the examples people were taking from here, but this is not an exhaustive list. This is a very small list in terms of when you basically see the industry. There's a lot of industries, and that basically we actually discussed like a combination of industries in a country basically makes an economy. Okay, so I think we have okay. So don't do anything stupid. Just a moment, huh? What is it? How should I cancel? No. Yep. So I think we have discussed this point, and we were already discussing identify one example of category. Okay, can you just give me a name for each of these? Just a quick see. Let's see who basically gets the answer for like all the categories. Like name a company, name an organization that you can think of. Like you'll just write the category and name. Okay, now let's see how many companies you can name for each category. Like commercial would be easy, and not for profit NGOs I can help you, trade unions I can help you, charities I think I'm not even familiar with the charities. I'm not seeing any answers. Nice, nice. Achal, that's a very good example. I was actually not able to recall any charity name. So being human, yeah, it's a charity firm. Right. Commercial, yeah, ICICI Bank is a good example. Amul, yeah, Arjun, nice example. Okay, other than Amul, do we know any cooperative? I'm not sure like many of you know about cooperative, but other than Amul, do we know? Okay, nice, Amul, nice example. NPO school, public sector, anyways, public sector, railways, yeah. Railways is also non-for-profit. Nice example. Railways is actually a good example for not-for-profit. It does not earn profit, but does not mean that it will neglect profit. Its primary aim is to basically welfare of the public, like providing services to the public. But the main aim of the railways, like Indian Railways, is basically providing services, but does not mean that it's basically run on only losses. It tries to generate revenue. Okay. Okay, I think we are good with this. So the answer is given, but in the back of the book, like once the chapter is finished, so there will be answers for this, but that will be basically based on Karnataka Milk Federation Union. Nice, Vrinda. That's a very good example for the trade union. Defense industry, yeah, definitely. All the defense industry is basically public sector, because mainly government does not allow the privatization of the defense industry because it's a very sensitive industry. So yeah, nice. Indian Coffee House. Indian Coffee House. I'm not sure. Like I have heard this name. This is for commercial. Not sure. I haven't heard. Anybody who has heard Indian Coffee House? Cooperative society. Okay. I was not aware about it. Nice, Vrinda. That's a good example. Okay, so let's move ahead. Okay, can we open you? Please get open. Bharati Shakari Bank Limited and Cooperative Bank. Yeah, cooperative banks. I actually missed this one. Cooperative banks are actually a good example of corporate this corporation we were reading earlier. Okay. Now, before this is actually what we just discussed about not for profit. Will basically differ for a minute. We'll be basically first covering the limited liability. This 1.6 1.7 we will be discussing just a little bit later, because we have already discussed most of the things, but we'll be discussing later on, because right now I'm basically want to discuss this thing with you, limited liability. Okay, PPT is also now on fine mode. I'll not, zoom it out. Trade union examples, like one of the examples someone gave, actually Karnataka Milk Federation Union. Trade union is basically okay, I think Milk Federation Union, I'm not sure like this is for right example. I didn't pay attention. Basically trade union is basically mostly common trade unions are the labor unions. Let's say Tata Group is a very largest group and it has like thousands of labor, like thousands or and in that any manufacturing industry normally has labor, and they all basically constitute their union together in order to raise their voice, in order to basically protest for any downsizing. Something is we are going to discuss about, like when company decides to lay off their employee, basically fire them. So basically the trade union basically works as a help each other, like voicing for themselves. Because an individual, let's say I work in an organization and I'm an individual in the in like thousands of employees, so individually I cannot do anything. But if we together like combine our basically voices and then basically raise any concern, so that will definitely be heard. Okay, so that basically trade union is basically is for. Can students union be an example? Yeah, definitely. Yeah. Any union which is basically to raise their voice, but basically that there is a small line basically that basically differentiate from a trade union from basically a student union. Why? Because there could be some protest groups. Not every protest group is necessarily a trade union. Okay. So what I was about to start, limited liability. Okay. So let's say limited liability. Please hide yours. Now you also, yo. So basically, whenever we were just discussing, and this is a very important concept. So let me tell you a very quick, very fun fact story. How limited liability actually came into. I am actually not good at remembering names, so I'll not name the person, but this is actually a US president, and this is actually around somewhat 1800s. This is actually a true story. I'm actually not remembering the person who actually did that. So basically what happened, the president of US, he had a friend, okay, and that friend was actually a businessman. But what happened, he was earning good money and he was basically investing the money and he was basically running his business, and normally he was earning profit. But because of some unforeseen circumstances, his business flopped. Basically he stopped earning revenue, and when he stopped earning revenue, he had some debt, some borrowings in his balance sheet. And the creditors, or the basically the people who provided the goods on credit, they started asking for their money. Okay, but the business was not big enough, large enough. The business did not have sufficient assets. The business did not have sufficient assets that it could pay off its liability. So what happened, they actually sold his house. They confiscated his property, they sold his house, and even then they could not recover the entire amount. So the person was actually sent to the jail. This is actually true. This is what, how this is not like limited liability has not just come from out of nowhere. There have been some incidents, and that is why some concept actually build up. So what happened, the president actually went to see this person in the jail, and there he actually discussed like why his business mistakes actually had his family to pay the price. Like he was a businessman, so businessmen may make mistakes. Like there could be a business decision that could be that could not go in your favor. That is not a fraud. Okay, mind it. Once you make a business decision and that is does not go in your favor, but the decision was ethical in all sense, all business sense, that was ethical, so that is not a fraud. But the business decision was flop because the decision was not correct, and it actually led to a adverse financial impact for the business got flop. And the person had, but because of that person, the person family had to pay the price, because now they were on road, they do not have any house to live. So that's why he basically said, why my business is basically taking my personal life away? It's not fair. Okay, The person who are actually investing in my business, those people who are giving me credit, they actually know that this is a business and this is a risky thing. Once you run a business, this is not easy. There's going to be some risk involved. There are going to be cases where every decision you take may not come into your favor. So why his personal life should get affected from this? That's why basically they created this concept of separating. Please understand this word, separating the person who owns the business versus the company. I'm saying the person who owns the business versus the company, they just separated it. And there they basically decided, okay, a company would be having a limited liability. There is a concept that is called company having unlimited liability. There's still a concept that is in some countries where companies have unlimited liability. But in this case, now the company, because it's separated from the owner now, it will have a limited liability. And what does limited liability means? It means if business flops, if business does not, if business cannot generate revenue anymore and it is unable to pay its debtor or creditor, basically it's creditors or basically borrowers. If it is not able to pay its borrowers or creditors, it's not able to meet its debt obligation. In that case, and after selling off all its assets and resources, then the company will be shut down and there will be no liability on the person owning the business. Why? And this basically makes sense. Why somebody who has made any business decision, his personal life should get affected? And I'll actually also give you one more logic of it. But till now, are we clear about this? Till now, are you understanding where I'm going with this? Like why this limited liability is there? Like what was the actually need? Okay, yeah. So let me give you another example. And actually, this is very practical. I hope you guys know that Reliance in India has one of the biggest refineries of oil, right? And also Reliance in India has many other businesses. Like they have business of FMCG. Like there's a Reliance Fresh that is owned by a different company. That is a parent is Reliance, but that is owned by a Reliance subsidiary. I'll come to the parent and subsidiary later on. And then there is a Geo. We all know about Geo. Like Geo is one of the telecommunication company that basically provides the internet service, and Geo has actually revolutionized the whole telecommunication industry. Okay, now let's say Reliance has this refinery in the on the sea, and some spillage of oil happens, and because of that, there is a fire in the sea. Like there's actually an explosion, and that actually basically caused the there's actually severely damaged the whole site. Also, in that incident, some people dies, and that actually creates a liability of, let's say, 1 lakh crore over the Reliance. But do you think, does it justify? I'm just asking you. I'm just asking you as a general. I'll tell you what will happen eventually. But do you think that because of the bad decision at the oil refinery, the FMCG business, the Geo telecommunication business that is running profitable, should get affected because of that? Though as a parent, Reliance will suffer. As a parent, Reliance will suffer. But because they will lose money, they will lose money. But because Reliance Oil Refinery is a separate company, so the creditor or the borrower of the Reliance Refinery cannot come and ask Reliance Jio, hey, give us our money. No, because Reliance Jio is a separate company. And that is the beauty of the limited liability and a separate legal entity. I hope this is clear. Right? Okay. So this is actually what is actually practical. The purpose of limited company and a separate legal entity is basically you should not held accountable for. Yeah, very well said. Very well said. Parent company should not be held responsible. But that there are some exceptions, Umar. There are some exceptions. You cannot always say, okay, we are separate legal entity, especially in case of frauds, or when the larger public are at risk. So sometimes there's a corporate wheel. Corporate wheel, do you understand? Corporate wheel that is lifted. So sometimes that happen, but that is only in case of fraud, or mostly in case of fraud, or some basically for the, when something is very unethical is going on. So only then there's are exceptions, but otherwise, when once there is a separate legal entity, so you basically understand, like a single company can run basically a multiple businesses, but because of a decision in a different business, basically it can get affected in other businesses area where it's performing well. So that's not, that does not make any sense. That's why the separate legal entity and the limited liability concept actually came. Like the person's individual life does not get affected because of that, and also the other person's action does not affect the different company. Hope the can you explain once again which part, Sankalp, do you want me to explain? Like the separate legal entity or the limited liability part or the entire part? Because this is a very important concept. This is basically foundation, and this is going to come again and again in your life. So that's why I want you to be very crystal clear about it. Sankalp, I didn't hear from you. So legal entity, okay. Legal entity, basically separate legal entity means like Reliance, there's a Tata, do you know any company you can name that that is a large company? I'll try to take an example from that point. Any company that you can think of other than Reliance, because I think I've already given the Reliance example. No worries. In case you're not Tata, yeah, Tata. I was about to give Tata, but I thought I should ask you. So Tata has multiple companies. Like Tata is a very large conglomerate. Tata is one of the largest conglomerate. It has more than 170 companies. So each company basically does its like there's a Tata Motors, Tata TCS, one of the largest company in the India. Tata Motors is there. Then there are other subsidiaries of Tata Trust. So all these are different individual company, basically involved in their specific task. Okay. If today there's like there was actually a news that Tata Jaguar is the right now the with the Tatas right now. Okay. So if there's a fire in the Tata Jaguar, actually this has happened. This has happened that there was a fire in Tata Jaguar, and there was some litigation, some filing suits, some court cases against Tata Motors for that. But even then, that would not affect the TCS company, because TCS company is running separately, though they both are owned. Like let's say there's a TCS, there's a Tata Motor, and then there is a Tata Trust, which is basically owning both companies. Okay, they have the share in the TCS, they have share in the Tata Motors, but because the Tata Motors is not, there's some adverse business decisions or some adverse business effects in the Tata Motors, it will not basically, special legal entity, the company act like an artificial person. Yeah, definitely. That's a very well point, that separate legal basically is an artificial person. Yeah, we'll discuss like what is an artificial person. Special legal entity, separate legal entity you want to say, I believe, not special legal. So I hope you are clear, like separate legal entity basically detach these two entities, and then basically you are responsible for your act, I'm responsible for my act. And because we are company and we have limited liability, so your liability does not come to me because my liability is different. And I will only be responsible to the extent of my assets. So basically limited liability means I will only pay to the till the time I have money. And separate legal entity means basically we are responsible for our own problems. We are not going to mix it each other. Okay. Hopefully that is clear. Now, Saga, you were is limited liability company name as same? Yeah, LLP. Yeah. This is also limited. This is basically recently been introduced, like 2018. Like in 2018, it was introduced in India, but mostly in US, like companies, they are basically LLP. Even the big fours are LLP, limited liability partnerships. So this is basically common. LLC, basically they call it LLC, limited liability company, and some of them are limited liability partnership. They both are in the same concept, like they have limited liability and there's a separate legal entity. And in the limited liability partnership, there's a concept of separate karta. There's a karta concept there. So are we clear on this? Sagar, I think your query is remaining like the separate legal person is a artificial person. When I say artificial person, basically this is basically based on law. This is basically on paper only. See, companies will always be the employee and the individuals that are running them. Company is not a person in real life. Okay, company is not physical. You cannot go. You can go to visit a building, but you cannot visit a company. Company is just on paper. That is why it's called artificial. Artificial means that it does not exist in reality. In reality, there's no thing as such company. This is only, if I talk about Reliance, we are just talking about Mr. Ambani. Okay, be clear. When I talk about Tata, we are talking about Ratan Tata sir. So they are individuals and they have, big groups with them. Like they are professional individuals, they are people, CEO, directors and whatnot. So they actually, company is basically run by individuals like humans like you and me, but because it is based on law and because it is only on paper. Okay, so that this is actually all, this is created just to create a separate legal entity concept and the this limited liability concept. Hopefully that is clear. So we'll be just jumping to the PPT right now. Okay, so basically whenever you see a company, so how do we identify a company? Any company that starts that basically ends with the term like limited. LTD basically means limited, and PVT Ltd means private limited. This is basically how things are denoted. If you Google it right now, you'll see that any company you will see is basically limited. And this is basically compulsory. Why? As per many countries' law, this is very common that any company that is limited has to show in their name that they are limited. Basically, public understand that they are limited liability. Let's say I'm a supplier, I provide goods on credit. So I understand before, providing goods to the company that this company has a limited liability. So in case it defaults and it does not have assets, so my money will be gone. That's why every company is basically denoted with this limited term. Then we have discussed this separate legal entity, like shareholders are owners, but have limited right to saving dividend. Okay, separate legal entity. I'll also discuss one thing about separate legal entity, like agency issue. Is small company and one-person company same? Small company and one-person company are not same. Small company is basically a company who has a very small capital. One-person company is basically something that is run by only one person, only one shareholder. So basically, this is a concept which is in India, and I'm not sure like about other countries, like they have the same concept about one-person company, but the concept is that there would be a single individual shareholder. Mostly companies are run by two or more individuals. In case of private company, two or more individuals up to 200, and in case of public company more than 200. Obviously the shareholder, if you see any company like Wipro or Infosys, or like say Tesla, Apple Incorporation, Coca-Cola, or let's say Boston Consulting Group, so you'll see that there are many individuals in that company. So that's why one-person company can be called as sole proprietor. No, because it's a separate legal. Kritika, there is a separate legal entity and a limited liability concept. That's why it cannot be called sole proprietor. Sole proprietor has unlimited liability. That is a disadvantage for a sole proprietor. Limited basically, if you think about it, everyone should open a company, but there's a reason people don't open a company, because there's a running cost, there's a administration cost, there's a filing cost. So people don't open company. Otherwise it is best practice to open a company, but because the cost involved in running a company, because you have to file with registrar company, you have to have an audit, you have to have file your annual reports, make your financials public. This all thing basically require cost and time. That can be checked, Omar. Like partnership basically depends, like whether which statute basically governs the partnership. There are multiple statutes in multiple countries. Have one more than one shareholder, but one-person company have only one shareholder, right? Yes, Sankalp. Small company can have more than like two or more individuals. Like let me just clarify. Small company basically means I'm just taking an example of private company, not a public company. Small company can also be a public company. So private company, two or more individuals up to 200. Okay, and exceeds the time, they have to pay fine. Yeah, Shivraj, that's true. Filing. If firm and company same, no, firm and company not same, because firm can be like anybody, like any company, any person who starts, organizing. Explain just a moment. Let me explain one point. Firm and company are not same. Firm has limited. Most of the cases, firm has limited liability. Like I can open a firm where what I do, I provide a service like in terms of financial advisory and all that. So I can open a firm. But because it is not a limited company, it is not registered with a registrar of company, it is not a company. Company is basically something that has a limited liability and a separate legal entity concept. Firm is used in case of partnership. Yeah, partnership are firm. Partnerships are firms. But partnership can also be limited. Please mind that if it is governed by a statute. Statute means law. If it is governed by a law and it allows the limited liability concept, then partnership can also be limited, like LLP. In India, there's a limited liability partnership, which is governed by the Limited Liability Partnership Act. Actually, there's a Partnership Act, Limited Liability Partnership Act. So that actually governs that. Okay. Okay, I think we are good now. Let's discuss this point. So separate legal entity, I think we have discussed most of it. And then there is, you know what, there are cases like, I'll give the example of Infosys or Wipro. Infosys. Infosys is a good example. How many of you do you know about Mr. Narayan Murthy? Yes, Shivraj, you know, nice. Anyone else? I have heard name. Narayan Murthy, in case you don't know, he's a legend. He's a legendary person in terms of, he owns the Infosys. Infosys is basically IT-based company. IT-based company and one of the largest IT-based company. Like TCS is also IT-based company, but Infosys is also one of the IT-based company. And mostly all the softwares that we use today, like even the government sites, they are either basically designed by the IT or TCS or the Infosys. So Mr. Narayan Murthy is the chairperson. Like the chairperson is a term that is used in company. I hope you have heard it. So he's a chairperson of the Infosys, but he actually does not run the company. He has, because his age a lot, so now he is not running the company. The company is run by different individuals. Like they are, I'm not sure, like you have heard this person, Vishal. So he was a director. So there was some conflict between Mr. Narayan Murthy and Mr. Vishal Sikka at that time, because he was a director of the company. Now see this term. There's a term that is called agency. Like directors are the people who basically, like somebody mentioned board of director, like directors are the individuals that run the company. Whereas the owner of the company can be another person. Like in case of Reliance, there are like lakhs of people who are the owner of the Reliance. Like anybody can buy the share of the Reliance and become the owner. Like you can basically create like ownership of crores of shares. You can actually create crores of shares. If you go and watch the any company shareholding of big company, you'll see that they have crores of shares in their company. And basically they basically split the shares and sell it to the normal public. So the owner of these shares are basically different individuals, but the company is not. Basically, if I buy today, I buy the Reliance company share, I'm not going to eligible to run the company. That is not how it works. The way it works is that they are board of director who are responsible for basically running the company. So anything that happens, anything that basically, like whether to introduce a new product, whether to launch a new business, or whether to go in any other country, these decisions are mainly taken by the professional individuals, which are mainly the board of director of the company, which are basically called the karta dharta of the company. Basically they look after the company, what is going on. They see like whether we are earning profit, how can we basically create strategies to overcome our competition, how can we ensure that we are complying with the government's law, how can we ensure that there are technology, that we are basically up to date with the technology, we are not basically running on an obsolete technology that does not satisfy our customer needs. So these are things that are managed by professionals who are basically expert at those things. And that is why, because the company is so large, that is why these are normally basically managed by directors. So what happens, that there's a shareholder meeting, that when a company becomes big and they have a shareholder, so basically what happens, there's a shareholder meeting. And what happens there, they appoint the director there. Okay, and the director now basically runs the company. Now this could be a little confusing for you. So let me basically let me give you an example of a small business. Let's make it big, and then let's see, and let's make it a public company, and then let's see how the board of director gets appointed. So let's say today I start a small business. Let's say I'm good at I think you have heard this person, Miss MBA Chaiwala. He's very popular in India right now. So basically, let's say I start a tea stall for myself, and the business runs really good, and now I'm started generating revenue. So now the business is expanding, and what happens that I think, okay, now I need to expand, so I'll basically make my organization. Yeah, I'm telling, I'm coming to that, I'm coming to that. That's why I'm just giving this example that will actually create a base for you. So basically I just started it, let's say tea shop, and the business is running it successfully. So I think now I will take the risk and I'll make the organization big. So what happened, what I'll do, I'll basically employ more employees. Like I'll basically hire many people to work for me. They'll now start making chai, and I'll basically, start, working on things like expanding business, going to different states, setting my operations there, and then basically working on all those stuffs. And this actually, works well for a couple of years. Then my business actually now becomes multi-state. Now I'm not only based in Delhi. I'm also based in Mumbai. I'm also based in Kolkata. Now my business operations are running really good. So I feel okay. Now I have many employees who are currently working under me. I now, because I cannot individually manage each thing. So I appoint individual managers for each state. And I see that the public is also noticing my name. Like now they know, okay, there's a tea shop that is built by ACCA Vishal. So they basically want to see like ACCA Vishal tea shop. So this is the brand name. Please don't laugh at that. And then basically what happens that people start recognizing. So I start noticing, okay, now I, as a, whatever decisions are done by me only. Okay, I'm making the decision, like in where to open the operations, and like how many shops should be there. But I'm also noticing that there is public interest going on. Like people are recognizing my name, people are recognizing, okay, this is the tea shop of ACCA Vishal, so let's go there and drink tea there because they make a very good tea. So I started noticing all that stuff. So what I do now, because till now I was a private company. I was basically, we were a couple of folks there. We have invested a small capital like 10 lakh, 20 lakh, and it actually went really good. But once we become, we started having more money, we started, expanding, and we now become a recognized brand. So we think, okay, now let's go public. Now instead of a private company, let's become a public company. So what happens there, that now we, in order to become public, I have to basically get myself as a listed in the stock exchange with the SEBI, and then there's an initial public offering. So this is basically a legal process that goes on there. In order to become public, I have to ask to in order to raise money from the public, I have to offer offer the public my ownership, some part of my ownership to the public, and that is a process is called initial public offer. And that basically is done through the stock exchange, which is currently done which is currently regulated by the SEBI, which is basically Security Exchange Board of India. So once that process is done, now there are other individuals, very small individuals, basically, who have invested their money in my company. Now they are also the owner, I am also the owner. But because I have built this company from the very scratch, I have basically have the understanding of how basically run this business, how basically promote this business in multiple states. Like I know how basically what people from Delhi expect, what people from Mumbai expect. They have a different taste. So I have this understanding. So I'll be still running the company. But because now I have sold some of my stake to the public at large, they will be owners of that company, but they'll not basically run the company. That will be done by me. Though at the same time I'm running the company, they appoint me as a director, and basically I become the director of the company. So I'm running the operations of the company, but at the same time I'm also the owner of the company. So what you can say is, when I was basically, before going public, I had the 100% ownership of the company. But after going public, I sold, let's say, 30% of my ownership. 30% is what I have sold and still have the 70% of ownership with me. So in this case, I have the majority control. So in order to, make any decisions, in order to make any very important decisions, you need to have control over that company. And in order to, make the control, you need to have a 50% threshold for that. Like there's a 50% threshold where if I have ownership of let's say 20% in my company and I sell rest of it to the public. So what will happen there, they will basically, in order to make any important decisions, let's say we want to acquire any company, let's say there is a tea point wala, so I want to acquire my competitor. So what if we buy 51% of share, then we get half part of the company. 51% share basically gives you the right to control the company, because in my example, when I basically went in public and basically make this company as public, and where other persons also, get ownership of that. So what happened, once they own more than 51%, they will basically be basically making the decisions. Without their consent, I will not be able to make any strategic decision that is important for business. So this percentage plays a very important role when it comes to decision making, because as a director I will be running the operations, but when it comes to, strategic decision making, I will always ask my shareholders, I will always ask the owners. So I hope you can basically clarify this point, that there is a ownership, and ownership is always between 100%. I was the promoter because I basically started this company. So promoters are those people who start the company, and basically after running the business successfully, I made it public company, and I sold some of my percentage to the public. If I only sell like less than 50%, like let's say 30% out of all 100%, I will be still owning the 70%. So every time I don't need to, ask for permission for like making any decision. Now let me give you an example. Let's say Reliance. Currently Mr. Mukesh Ambani owns 48% of the Reliance group, but he still makes most of the decision by himself. Like Geo was a very big decision to make, like he actually invested lakhs of crores of rupees, but actually he did not require the permission even after having the 48%. Depends, Omar. Like I'm actually discussing this point, like what percentage actually plays a role in terms of, ownership. Let's say in case of Reliance, this is actually the case right now, they have less than 50% ownership, still they are able to make the decision very easily. Why? Because the rest of the 56%, like rest of the 56% that is owned by the other people, like the large institutions, like the public, they are very difficult to gather at one place and agree on same thing. Like you as an investor would want that, okay, I want my company to grow. On the other hand, other individuals can want, okay, I want the dividend. Why company is not declaring a dividend? Dividend is basically when you earn the profit and you distribute to the public. Public means your shareholder, not the general public. So basically, once your shareholding is distributed among many shareholders, so the decision making for them becomes difficult, because they all have to agree on something, and that is actually very difficult. So even when you are not owning 50% share, 50%, basically more than 50% is basically a very general term for checking who's controlling the company. But it is not necessarily, and this is actually one of the cases that you will be seeing in your, in your accounting standards when you'll be studying later on in your finance and accounting, you'll be seeing that 50% is not necessarily the criteria for checking the ownership. Okay, so even in case of Mr. Mukesh Ambani, who's currently owning 46% or 44% of his company, he still makes the decision. He does not have to take the approval of most of the shareholders. Why? Because most of the shareholder does not basically, agree on same thing. So what about share types? Yeah, we'll be covering share types later on. So let me just quickly cover a couple of questions. What is the role of CEO? So basically, Kritika, CEO means like basically board of director, they appoint the CEO. Like out of like all the directors that are there, they are multiple directors, like finance director, like there is a director of operations, there is a director of marketing. So multiple directors are there. So they actually collectively decide like who will be the CEO, who will be our, leader. So that is basically the role of CEO there. What if we buy 51% of share, then we get half of the company? Yeah, basically the percentage that you buy, basically that portion is yours. That is interesting, Divyam. If you buy any percentage of a company, let's say I buy, let's say there are 10,000 shares, I buy 1,000, so I become 10% owner of that company. Okay, but that does not mean that I have the right on the asset of the company. I have the ownership of the company. They are two different things. Ownership of the asset is not like, okay, I own the 10% of the company, so there is a building of the company, so give me 10% of the building. No, this is doesn't big way. The building is the property of the company. I own the 10% of the company. So again, the separate legal concept comes. Sir, if I have 50% of 51% of the share, which one is better? No, as I said, depends on circumstances. Like if the shareholding of the company is distributed and you have the largest shareholding, so you'll still be in control. You'll still be in control because in order to defy you, the majority has to actually agree with each other. And if that is basically distributed among many people, then that is difficult. Let's say there is a case, like let's say one individual has 40% share, other two individuals have 30% shares. So in order to, make any decision, any two individual will always need to, come together. Like let's say 30-40 basically makes it 70%. So the third person who owns 30% will basically would not basically constitute control. But let's say the person who owns 30% and 30%, they basically start decide basically form a partnership kind of thing on their personal level, and then the person who owns the 40% would not have any control. So that basically depends on case to case where the basically controllership comes. Okay, does 51% should be the promoter share? Or promoter basically means, see this, promoter basically means the person who starts the company and basically runs the company and then basically make it public. In case of Apple Incorporation, Mr. Steve Jobs was the promoter of the company. Okay. Sir, there is one more reason, because they hold biggest amount of share, even though it's less than 50%, biggest amount of share. Sankalp, I didn't get it. If they are holding less than 50%, then how can they hold biggest amount? I'm not sure. Are you saying that they are the biggest shareholder? Is that what you're saying, Sankalp? What about the share types? Yeah, there are many share types. There are many share types. Share types is basically equity shares, preference shares. We'll be just touching on that. That is not covered here. That is basically covered in your accounting and finance classes. So basically, I'll not touch it, but I'll discuss it. Okay. Majority shareholder appoint board of director and control company's operation. No, companies operations are basically Shivarsha. Basically, companies operations are controlled by the board of directors. They make the day-to-day decision making. See, try to understand. If I own the share of a company, let's say I am an investor, I basically invested my money in the Reliance. So in the day-to-day decision making of Reliance company is not going to ask me, okay, Mr. Vishal, what should we do? Or let's say you invest in Tata company. So they are not going to approach you and ask you what should we do about it, because we are just a shareholder. Okay. The day-to-day running operation is managed by the directors of the company. Okay, but in case there's some important decisions, let's say they are going to acquire another company, they are going to sell off their existing business. So these are some decisions which are going to impact the business altogether. So whenever there's a strategic decision that requires, that affects everyone, so that is why basically that is why shareholders approval required in those cases. Otherwise, mostly it is done by the directors. Does this work same as equity? Vrinda, can you explain your question? What do you mean by does this work same as equity? Yeah, Omar, I think what you're referring is bonus share right issue. I think that's what you're referring here. I think actually now the question, the question that you are asking is more of, about how companies formed and like what a number of shares and ownership. This is all basically all accounting questions. So that's why I'm seeing this many questions, because what I wanted to make you understand is about like what is a limited liability and what is a separate legal ownership, and then there's a agency thing that goes on. Yeah, Omar, we can issue number of shares. It does not necessarily mean that we can basically raise money only once. We can raise multiple times. That's same thing, Vrinda, that's same thing. Issuing share is basically you issue shares basically to raise money. There are cases of bonus share and right issue, but let's not consider those things. These are basically some technical things. Issuing share, you basically issue share. Issuing share means basically, let's say I have 100% of ownership. I am going public. I am raising money. Why I want to raise money? Because I needed to further expand my business. And why people are giving me money? Because I'm selling my ownership. Let's say you own a house, so you basically small, let's say you own a building and there are 10 floors, so you basically sell one floor out of 10. So that is basically selling ownership of one floor. And that is similarly what happens with the company, that you basically sell the ownership of the company. But always mind that if you are owner, doesn't necessarily mean that the assets of the company are your property. No, that are the property of the company itself, because there's a separate legal entity that basically makes owners different from the company. Like if you remember my earlier example where I told you that a company's a bad decision basically will not basically make you responsible on your personal assets. So similarly, it does not give you right to the company's assets. That assets belongs to the company. In case you sell the company, that's a different thing. Then when you sell the company, then whatever money you generate will come to you as a shareholder. Okay, I hope that is clear. Everyone, till do we have any question? Should I move on? Okay, nice. So this is actually what we have discussed so far. This is what we have written, like limited company, private limited company. Shareholders are owner but have limited, like I said, that shareholder are not necessarily own the assets of the company. They do not basically participate in the day-to-day decision making. Okay, and this is the point we were discussing, like limited liability cannot be sold beyond the debt of the company. Like if I have the asset of the company, the number of assets that we have as a company, let's say company has a 10 lakh of assets, or let's say public, in case of public company, they have 1 crores of assets or 10 crores of assets. So if we have a borrowing of 12 crore, so 2 crore will be defaulted, will not basically pay 2 crore out of our own pocket. Okay, director company are appointed by shareholder. So in my case, like in case of tea a shop, so basically in this case, because I did not sell my entire shareholding, because I still own the 70%, so I'm also a shareholder, so I'll be appointing myself as a director only. But in case the ownership is with the other shareholder, and they basically decide to appoint somebody else, so then basically majority decision will prevail and somebody else will be director. And executive and non-executive basically means a director who's on basically executive director basically means somebody who's basically running day-to-day operation. Non-executive, somebody who's basically working as an independent director. We'll be discussing that in the control point of view. But independent director means is there somebody who basically comes to visit company very like twice or thrice in a month, or maybe a quarter. Okay, so we'll discuss like what is a non-executive and executive director. So this is a point, like private company owned by smaller individuals like family and are not easily available for trade. Somebody actually asked yesterday, like what is the difference between public company and private company? The only difference between public company and private company is the way the shares are traded. Even private company shares can be sold, like you can sell it to your friend, family member, or somebody, an unknown person also. But that is very hard to find. That is very hard to do. But in case of public company, if it is listed on a stock exchange, that is very easily manageable, because in stock exchange you just tell your price, and if a person agrees, then you'll basically sell those shares. So public company shares are easily tradable in comparison to private company. Private company shares can be can be sold, but the difficulty part is to find the buyer. Or basically usually run the company, they have less stake. Okay, one thing what is written here, director usually run the company and they usually have less stake in a company, as well as there could be agency issue. Okay, so we'll be discussing this point. Let me just quickly see the next one. Mostly companies. Okay, so can you guys just do the quick reading of this and let me know in case there's a any query related to this? I'll just make it big. I'll just do the quick reading and let me know in case there's any doubt, or should we go ahead? In the meanwhile, I just drink the water. Just read this and let me know when you are done. And let me know in case there's any question. How a private company becomes eligible as a public company? That is basically some process to follow, some rules and regulation that somebody needs to follow. First of all, in order to become a public company, you have to be recognized. Basically, they see there's a listed public company and there's an unlisted public company. There's also a term called unlisted public company. If you ask about unlisted public company, that is very simple. If there are more than 200 shareholders in case of India, what I can recall is a 200 number. I'm not sure that 200 is the right number. So in case of India, if there is a more than 200 shareholder, then you have to become a public company. Okay, so that basically number of shareholder basically makes it public. In case of a listed company basically becomes uh, listed public company only becomes once the people, the general public basically invest in you, and for that you have to make your company actually lucrative and basically investable. If you are not basically investable, like people don't like what you do or like the way you do, or you don't have any recognized brand, so people will not invest money in you. First point, advantage, more money available. Yeah, basically one of the benefit of having a so there is a budget one of which is easily available information to public. So what does that means and how? Yeah. Which point, more money available, easier to raise capital from banks? Which point is where this is okay? Disadvantage. Okay, disadvantage. Greater administration burden and compliance cost. Financial statement report, tax audit file, especially for listed companies. Shareholder have limited power other than share. Basically, what does it mean that information is available to public? It means that you know how I run my business can be copied by my competitor, and that is not something that I want, because it takes a lot of mind, lot of brainstorming to actually come up with ideas. And if you let's say we identify somebody, a supplier who provides a cheap good, but because my financial statements are public. Yeah, I'll explain. Because my financial statements are public, so the person let's say my competitor can also read my financial statement because they are public. We have to file a financial statement with the registrar of company, and any person can pay a fee and download my financial statements, so they'll know about like how basically financially strong my balance sheet is. They'll know how much money I have, like not exactly, but because financial statement are historical records, but still they can basically get an idea, and that can basically gives me a competitive disadvantage. So definitely limited companies, because they are regulated heavily, so they have to file their financial statement, and that basically makes them vulnerable to the competitors. Though they try to hide the information, in a confidential information company can check any person. Yeah, in a way, though even law allows you to keep the confidential information, but some of the information gets even passed on even if you don't want. Okay, so let me think, like there are a couple of questions, let me just quickly address them. First point of advantage. Okay, Kritika, you were missing like more money available for investment, easier to raise capital. See, because there's a company like more money easily available and easier to raise capital means that because you are a limited company and you have a separate legal entity, so basically a company is normally heavily regulated. There are many checks for a company once they get registered in a once a company gets registered in any country, so it has to follow a lot of regulations. So because it has to follow a lot of regulations, the investors, the banks which basically lends the money, basically where you borrow money, so they basically get some assurance, okay, the person is governed by a law, the person is basically following certain laws, so that's why I can provide my money to it. In case I am a sole proprietor, people will doubt me. In case I run away, what will happen then? But in case of a director, that is very difficult thing to do, because there are many controls checks on you. So that's why more money available for a limited company easily in comparison to a basically a company that has an unlimited liability. Certain point disadvantage easily available. So I think information to public and this more money easily available point is clear. Separating ownership and control, please explain once again. So ownership is like, simply see, I own a car. Let's say, let's give you a different example other than company. Let's say I own a car, but I do not know how to drive a car. So I rent it to a person, to I basically hire a driver and ask him to basically drive this car and earn the rentals, like go and do the Ola and Uber of this car. Okay, and basically earn some money. So I'll be the owner, but the person who's basically running the car will be different. And similarly, this is the case of a company. Just think like the directors are the driver of the company. They basically direct where the company will go. But because the company is owned by me, so definitely the risk and the benefit will be related to me, but the control will be in the hands of the director. So I think this makes it clear. Confidential information, company can check any person. Yeah, basically, as I said, if you are a registered company and you have to file your financial can be downloaded by any person by paying a fee to the registrar of the company and download your financials. Public company should always be the private company first, or no, no, this is not necessarily. I'm just giving you I'm trying to give you a practical example. Let's say if you are a wealthy individual, let's say you are somebody who's very who already has this money from the ancestors, like he owns multiple property and he has crores of rupees, so you can go public from the day one. So that is not necessarily. Whether you can go listed as a public company, that is not possible. Reason why is that there's a SEBI requirement. The SEBI, the statutory body that actually governs the listing of a company, that actually states before a company has to list it, it has to have at least 3 years of financial statement audits. That means that company has to exist at least for 3 years. So that's why a company cannot go listed company cannot go initially as a listed company. It has to have at least 3 years of history. So that's why a company cannot be a public company as a listed, but an unlisted public company can be formed from the beginning. Okay, I hope all this is clear. Any questions? Okay, Vrinda, actually, can you tell me like which part you are confusing? If you want, I can unmute you. Let me know if you want, I can unmute you. I mean, point 3 disadvantage, easily available information to public. Um, Third point is related to about like you are always going to be a disadvantage. Okay, third point, separate legal entity where ownership and control are separate. Yeah, that is definitely an advantage. Separate legal entity, like I mentioned in my earlier example, because I'm not the company. So I'm always be a different individual. I'm always going to be a different individual who basically enjoys his own life. Okay, whereas company, it is run by an professional individual. Separate legal entity concept is basically where I am different and my company is different. I am like, let's say I open a company and then basically they are assets to the company, they are liabilities to the company. So that is basically related to the company only. I cannot go and take away, let's say a company has an asset of fridge, has an asset of microwave, and that belongs to the company. So I cannot take that microwave and fridge to my home. Though it unethically it can be done, but in practice, but on paper that cannot be done. That is not possible. Basically, that assets are the ownership of the company, and because these are ownership of the company, that make company as a separate person. Okay, but because I own the share of the company, so that's why I'm the owner of the company. So all the information which are regarding the. So Vrinda, are you clear with this? That like I gave you the example of the driver, the car. So I own the car, but that can be basically managed by somebody else. And also, in case I basically run a taxi cab, and that is a registered company in this case. So in that case, I can enjoy the ownership benefit of running the taxi cab, but not necessarily the car that the taxi car is basically mine. That is basically with the taxi cab registered company only. Okay. Okay. Next question is generally all the information which are regarding the listed company are easily available through. Yeah, sure. Yes, Shivraj. The information for the listed company are basically available, and that's why they are heavily regulated, and that's why they have to comply with many laws and many requirements. There's an audit requirement, there's a financial statement requirement, there's a tax requirement. There are many things, and that's why these things are basically not inexpensive. They are highly expensive. Once you become public, that's why small businesses don't go public, because they don't have the money to bear the administration cost. Their administration cost is very high. Okay, hope this is all clear. Let's try to move to the public sector. So again, we are going to discuss one thing about is it necessary to limited company to publish their financial statement? Yeah, even to limited company, every company that is registered with the registrar of company will have to file their annual financial statement. That is a requirement. I'm not I don't think that there is any country who does not do it. Every country like has this rule that every country has their registrar of company, and they basically requires this. This is basically a practice, because now you're limited, because now the liability is limited. So the attitude you are going to have is like, okay, now I have a now I have a limited liability, so I can do anything. No, that's why, because you basically get the exposure of limited liability, you get the benefit of limited liability. So that's why you are required to furnish your financial statements to the public, so that they know that, okay, what kind of assets do you own before I start uh, supply any goods to you, invest in your company. That is the reason they basically provide the financial statement, and that's why law has mandated. They have given one benefit, also they have given one responsibility. Now I think public sector we have already discussed. So let me know if you have any question after reading this, because we have discussed this in detail already. So I'm just giving you time, just read it and let me know if there's any point I need to discuss here. No, otherwise it would not be private. Why would be a private sector owned by a government? No, no worries, no worries. I hope you are clear. Like, public sector is basically managed by the government. Government does not. The reason that government, I'm just giving you general commentary till the time you read it. What I want to basically convey here is, yes, yes, yeah, sure. So basically, government is basically interested in certain activity like pharmaceuticals, armed forces. Some are like railway services, transportation services. Railways is like way long in India, way long back in India. So that's why current government is still managing it, because they know anytime a private company will come, they will start charging high fee. And many poor individuals are dependent on transportation for railways only. So that's why government still manages it. Disadvantage point one, related to the limited liability, Sankalp. Just a moment. Actually, I have moved the PPT. I'll just get back to here. I'll just see here. One more example of separate legal entity could be if product of Reliance is not as expected, then the consumer can't sue money, but can, yeah, that's a very great example, Pratiksha. That's a very great example. Now, everyone listen what Pratiksha has actually written. It's a very good example. Let's say Reliance has a let's say Reliance basically have many products, and that products basically does not meet the requirement of the customer. Okay, and the customer is dissatisfied, and after trying to negotiate with all the retail outlets at the Reliance, he does not get what he wanted. So basically he files a lawsuit against the Reliance industry. That does not mean that the lawsuit filed against the Reliance industry basically will be against Mr. Mukesh Ambani. That's a very good example. Yeah. So you were asking, Sankalp, the first disadvantage of the limited liability. Just a moment. Huh? I'm just opening the PPT at my other laptop. So greater administration burden, compliance cost, financial statement reporting. So basically, which part you are not clear, Sankalp? Because basically, when you create a company, you get registered, so you have to be a lot of cost. You have to do a lot of compliances. You have to hire many individuals like chartered accountants, like company secretary, like cost accountant. Many individuals you are required to hire. You have to pay them, and you have to get timely file all these required forms with the government or government agencies. Like register company is a government agency, so you're required to do a lot of stuff because once you get registered as a company. And this is basically where make also sense, because government allows you to have a limited liability because they don't want your business decision to affect your personal life. So they want you to make responsible also. If you have limited liability, you should not have the luxury to waste people's money, right? So that's the reason that government does this. Hopefully you understand this. Okay, any question on this public sector? First disadvantage of public sector, often criticized for lack of efficiency. Yeah, please explain advantage of public sector. Okay. I'll try to explain one by one. First, I'll be discussing the public sector as a disadvantage. The lack of efficiency, I think, if you go to a private hospital and if you go to a public hospital, who do you think is going to, give you a best service? Private, yeah, rightly said, private. Why? Because private actually charges you. They actually charge you money, and that's why they provide you service. Anything that is basically provided comes with a cost. But in case of public sector, because it's government funded, government doesn't want you to pay expensive prices, because some things are necessity. Food is necessity, medicines are necessity, these are some essential things. So government doesn't want you to pay higher prices. So that's why government subsidizes, government fund those, as you know that any country have a medical budget, basically a health and care budget. So what does it mean? It means that government is allocating a certain expenditure for basically subsidizing the medicals. It's not like government is buying medicine. Medicine is bought by the private companies, private individuals, but they are provided extra money so that they basically can provide at a cheaper price. Let's say it costs them to buy some certain medicines to like 10 lakh. The government would give them like 4 lakh or 5 lakhs money, so that now the cost to the company would only be 5 lakhs, so they charge you accordingly. That's what the purpose of the government is. So in case of a public company, because it is funded by the government, but government has limited money, government always going to have a limited money. It's not going to have an unlimited money. That is the difficulty of any government that faces. So the public organizations, public sector are normally basically what happens, they are always low on money, low on budget, so they have to manage it. They are going to be less doctors, they are going to be less beds available compared to the general population we have. Because once something is cheaper, that is its demand is going to be asked by many individuals. And that's why because government has limited resources, that is the reason that it cannot meet the requirement of everyone. That's why there's always going to be a lack of efficiency, because they are always overburdened. They are always going to be more demand and less supply, so very difficult. And yeah, demand is high, supply is less, and also the funds is low. The thing is, here in case of private sector, there could be a thing where demand is high and supply is less in case of diamonds, but there is a money, there's a lot of money there. So they provide the best services. When they deliver the diamonds, they give you a very shiny shop. Not like you're not going to find diamond shop in a very bad condition, but you are going to mostly find the public sector in a bad condition if the government that is running that public organization does not have any sufficient resources. And this is mostly the case with many governments. So I hope the lack of efficiency point is clear. Why the lack of efficiency? Because they do not have sufficient resources, so they have to manage with what they have, and that is basically makes them less efficient than the private organization. Okay. And I think fairness, somebody asked also the fairness point. Who asked it? Like, how is fairness ensured in the public sector when we know about growing consumption? Yeah, see, what do we mean by fairness is that we like I mentioned in the pharmaceutical example, that government try to because this is a necessity, certain things are necessity. Public sector, why government basically invest money in public sector is basically like railway is still a necessity for many individuals in India who cannot afford expensive transport. So it is a necessity. And that's why basically government tries to be fair to those individuals. If you just do not have money, doesn't mean you don't have the right to live, right? Does right to livelihood is basically the right of everyone in any country, in any form, who is basically independent country. They are going to give you the right to livelihood, and that is above than anything. So that's why government tries to provide you cheaper prices so that you can afford. Just because you don't have money doesn't mean that you don't have the right to live. Okay, so that's what the fairness here means. Hopefully that's clear. Okay, you said growing corruption. I thought growing consumption. No, basically that's an again a very another very vague side of it. Like, yeah, sad but true. There is corruption. So, yep. What other need of public sector? Depends. Like, in case of railway, it's transportation, providing transportation to the public. In case of pharmaceuticals, it's basically to providing inexpensive medicine, basically cheaper medicines. In case of schools and trusts, is basically providing education to all. So this basically depends on which sector you are referring. So public sector has many needs, like where government is investing is basically very dependable. So now we come to non-government organizations. Point third, what was the third? 1 second, I just moved the PPT. Slow to adopt new technology, which resulting lack of competition. This is basically similar to what we discussed, lack of resources. Third point is basically slow to adopt the new technology. Basically means lack of resources. You have lack of resources. So how much you are going to invest in IT infrastructure, research and development compared to a private competitor who basically have a separate department for research and development. So there's always going to be a less technology available. I mean, this is very sad. Actually, the public sector actually, the whatever technology is there. So unless this is basically some basically military or some arm thing or certain some important sectors, unless that is the case, otherwise any public sector gets the technology at last. Like all the sectors, like private sector, all industry exploited, and only then that is left to the public sector. That is actually very sad. Okay, I think we are done with this. So I think we are going good. So should we continue with this point, or should we take 10 minutes break? Continue. Okay, nice. Just let's cover the not-for-profit and NGO. Then we'll be basically going to the stakeholders. And actually, we have discussed a certain bit of it, but we'll be covering it in detail. Okay. So let me know in case anybody feels that okay to us. If you see that to us is going very smoothly, I don't know why, but to us are going very smoothly. Okay, so let's please first of all have a reading. I think best way to have first at least let you read, and I'll basically add on to it. I'll discuss the concept, but let's see what you guys understand once you read it. I'm just giving you 2 to 3 minutes. Please read it. I've also given some examples. And let's see who recognize, or in case you're not able to recognize these examples, try to give something that you might know. Like somebody actually gave an earlier example. I'm going to just recall it. Done. Okay, nice, Kritika. Anyone else? Just giving me you 1 more minute. Done, sir? Okay, nice. Yeah, I'm going to explain. I'm not even started explaining. No worries. That is why I wanted you to first Okay. That's a very good example, Shivraj. No worries, I am not explained anything. Now, NGOs, non-government organization. So once you hear this word non-government organization, what do you understand by it? Let's see. Most of you are going to write this, what is written here. Private sector. Owned. Actually, the word that I'm liking here is owned, because somebody else also mentioned private sector. So in their mind, that is the concept of non-government organization is owning. Okay. Right. That's a right word. Controlled. Right. That's a right word. Controlled. How is it a non-government organization when receives donation from government? Because you guys are actually confusing it with the word ownership. You know, organization based on charity. Ansh. Okay, I think we have this many answers. I can see many individuals actually are not replying. So should I start taking name of every individual who are not replying? Okay, let's not hurry this much. I know sometimes it makes you uncomfortable. Is it for public use? It is. Okay. So basically, first of all, some of you actually mentioned private sector, some of you mentioned not owned by government. So NGO has nothing to do with the ownership. First of all, it's not ownership. Basically, what is the basic, like Shivraj actually gave one example, like there's an organization that is basically called like sorry, where is Shivraj missing? Not able to find it. I think that actually went up. Mighty Nepal. I think I'm pronouncing correctly. Let me know, Shivraj, if I'm pronouncing it correctly. Mighty Nepal. Save Traffic Girls. Okay. So basically, non-government organization. Basically, why? What are they? They are independent. First of all, read the word independent. Okay. They are not, independent means that is not basically based on any person's direction. They see the social problems in a society. Let's say there's a trafficking, like somebody mentioned, actually Shivraj actually mentioned one institute name, Mighty Nepal, if I think I'm pronouncing it correctly. And basically they actually addresses some of the issues in the society that are not basically addressed by the businesses, that are not basically addressed by the governments. Government does not have the sufficient capacity, or basically business sectors does not have the scope there. So these social issues are basically addressed by these non-government organizations, and they basically, like you say, like you can see, this is basically independent of government. They are not basically asked by the government. Like there's a women empowerment basically committee in India that basically works in the interest of women. There's basically like I mentioned some names like Goonj, helping basically poor people getting their basic needs. Then there's Ladli Bachao Yojana in India. There are many institutes, like somebody mentioned Being Human, also an organization. So these basically addresses the problem of societies that and basically they can have different objectives. Like one can have like related to poverty, one can have related to child abuse, one can have related to education, one can have related to elderly, like elder people are basically neglected. That is also a sad truth in our society. So they basically addresses different problems of society. They think, okay, we should set up an organization where we will be asking for donations, we'll go campaigning them, we'll go protest basically for this cause, we'll try to influence people. So basically they are trying to promote social awareness in terms of any subject that they feel. And they are basically independent, means they are basically constituted by a member of people who basically receive charity in the name of any objective. And that's why this is not owned by anyone. non-government organizations are not only. In case you feel that you being human is owned by Mr. Salman Khan, then that's not correct. He does not own being human. He basically run as a trustee. Trustee. He runs the trust of being human and run as a trustee. He's not the owner. And that's why it's not, basically a private sector or public sector, because many people replied private sector or owned by, not owned by the government. The ownership is not the right word for the NGO, because NGOs are mainly run by the trust, and trusts are not the owner of the NGOs. They are the governing body of the person. And basically what trusts do, because it has to, campaign, it has to, uh, spread awareness, spread leaves, flyers and all that stuff, and posters and all that stuff, and transporting people from one place to another. Like in case of like we had this corona. So how many of you heard this Bollywood actor Mr. Sonu Sood? So basically here what happened, like he has this he has basically that normal charity, it is for public use. Mahiti Nepal, yeah, yes, old age homes, Beti Bachao, Beti Padhao, yeah, right. Curious, just curious to know. No, this is basically initiative taken, Shivraj, this is basically taken by Beti Bachao, Beti Padhao is basically both taken by government as well as basically some independent organizations. They basically some people of this trust basically go to the government and also ask, like, we need, like, Beti Bachao Beti Padhao is a yojana, basically a scheme run by the government, but that is also supported by independent NGOs. That is also supported by NGOs. That is a scheme for basically promoting the children, small girls education. That is basically that. It works towards the provision of quality of education and privileged children. Yeah, Pratham. Yeah, it rightly said. Pratham is basically an NGO. Yeah, I have not mentioned Pratham here. Okay, I missed to include it. Actually, Pratham is one of the popular charity trusts. Why this is NGOs are non-profit organization? No, non-profit organization, you're confusing. Non-profit organization, we are just going to cover non-profit organization again. Non-profit organization are basically like railways. Railways is a non-profit organization. Still it runs its operations, still it generates revenue. NGOs are different. They do not generate revenue. They receive donations. And in case somebody say, okay, sir, what about subscription? Subscriptions is basically if you want to be part of any, organization like this Goonj, or let's say Give India, or let's say like somebody mentioned Pratham. So you can basically take a membership and pay them monthly. Like my friend is also running, one NGO, and he asked me, to be a member of that NGO, where I am just paying monthly, like some amount to that NGO. So that basically is the subscription fee to that NGO, but that is not revenue. So please consider that. Non-government organizations do not earn revenue in any form. They only receive membership fees from their member. And why the members are paying? Because they believe in their cause. Hopefully this is clear. Like, please do not consider NGO as an ownership thing, as a not-for-profit. Not-for-profit is a different thing. You may confuse not-for-profit because I have just given an example of railway. Railway is an entire operation for the whole country. And still there's a cost to run the operation, and they try to generate the revenue. But in case of NGO, this is not the case. NGOs, try to, let's say education. Education, you need books, you need teachers. So they try to ask volunteers. They try to ask private companies, or going to home and ask the books to basically teach to students. Hopefully this is clear. Sneha suicide prevention helpline. Yeah. Shri Varsha, that's a very good. There's a Sneha suicide prevention helpline in Tamil Nadu. So good to know. This head, or they are in partnership. Yeah, like I said, Divyam, they are trust. There can be a trustee, like in case of Being Human, Mr. Salman Khan. I cannot recall any other trust right now. If you can, basically there's a trustee who's basically popular. But they are not owners. They are just participants who basically govern. Like somebody will be there to govern the entire organization, but he is not, the owner, or the recipient of the money. Not the money that comes in non-government organization does not go away. Though that is a different reality, what happens in real life. But the money that comes in the non-government organization should only be spent there for the cause that they are doing, right? So hopefully this is clear. When I say that often they rely on donation and grant, that basically means that there's a header. Yeah. So basically, when I say basically they rely on donation and grant because they are not generating any sort of revenue. What they can do is basically try to sell some of the goods so that they generate the money for the organization to fund. Sometimes they also sell some goodies, some in case of national holiday, I remember there was an organization, so they basically was selling stickers of India. So that way they can actually make it make you basically pay for the some costs, and also at the same time generate the donation and grants, but that does not count as a revenue for them. Depends. Many NGOs, like some, they are some big NGOs. See, when you're running a small NGO, most of the time you are not going to receive a salary. You are going to be a volunteer. But in case you are paid, so basically there some big NGOs, because they know that how the world works. Many people only work for basically money. So that's why sometimes NGO needs services of some individuals, so they pay money to those individuals. Like why people receive funds, they do not receive only fund to buy leaf outs or print posters. They actually pay some lawyers are paid by NGOs. Some lawyers actually volunteer, but many lawyers are paid by NGOs. So not all the services to NGOs are free, so they bear a cost, so they have to pay them. So sometimes they hire employees also. They though the salary received by them is very less. So comparatively they can be less, but world does work on money only. So that's why NGOs also have to pay salaries. Okay, I think we are good with this. Okay, now not for profit organization. Okay, can you see this blue line that I have given here? Yeah, this is basically a link because I'm not going to click it. I'm not sure like this is going to hang my system again. So what I'm going to do is basically not for profit we have covered sufficiently, but we'll just give it. Yeah, sure, Ansh. In case anybody else who wants the break. Okay, sure. So let's take 5 minutes or 10 minutes. See, we started late today, so please allow me to, take 10 to 15 minutes extra. I'll give the break, but please allow me because we started late. Yeah, 10 minutes break is fine for me, but please, try and understand my position also. We started late today, so we have to understand. Okay. Okay, thanks everyone. Let's have a 10 minutes break and then we'll discuss this. And actually, I want to show you something that you can refer yourself, which is important. So there's some study source that I'm going to give you today. So that is going to be helpful for you. Okay. So let's have a break. Let's meet after it's 8:17. So let's meet like 8:27. Let's meet at 8:27. Be sharp. Okay. Hello. So are we back? Hello. Let's see how many participants. Actually, there are less participants right now. Hello. So how are you finding this lecture? Basically, is there any doubt so far? Or in case it is related to any previous topic, uh, and you want like further clarification, you can just ask me on WhatsApp. That's completely fine. Great. Thanks, Shivraj. Thanks, Divyam. Thank you, Vinda. Thank you, Kritika. Okay. No, not necessarily. What I wanted to make you understand is that there is a trust behind the NGO. Even you and me can start an NGO, right? But let's say if you want to get the benefits of NGO, because government also provides the benefit to an NGO, so then there's a registration process, and then definitely that makes some body. Like my friend who basically runs an NGO, he's required to file his whole income tax return annually, and also basically submit the NGO's report, and that is run by lead by somebody else. So that definitely makes him the trustee. So that's how things goes in the NGO. Okay, I think we are good. So what I was about to show you is basically, I think we had this not-for-profit organization discussion. So I'll try. Let me know in case any points you think you want to add. But I'll want to show you this blue sticker. I'm not clicking on it because I don't want my system to hang anymore. Please go up. Please. I have to start a new tab. Just a moment. Okay. So basically what will happen, I'm going to tap something as ACCA because you all are ACCA students, and then I'll type ACCA Global. Once you type that, okay, yeah, we are at the home. The first link that will come as Home ACCA Global. So just click on that. I'm just actually showing you one more study resource where you can basically prepare for your studies, not only for BT, but for any subject. Basically, ACCA provides a lot of stuff for students. So that way you can basically refer. So there are many sections like home, like what is ACCA about, what the qualification ACCA about, employer, you want to work with the ACCA, learning provider like VG Learning is a learning provider, and members. Like once you become a member, you'll get this CPD courses and all that stuff. So now let's talk about the student stuff that we are here for. So there are many things like you can book your exam from here. Like, see, I'll not be telling is addressing each section, but more or less this is exam section where I think you can know about your exam, even book your exams. This is study support, which I want to discuss today because this is the link that I have given. In that meantime, in case anybody wants to rejoin, because I still see less participants, so no worries. So you just click on study support resources, and after you have clicked it, there is basically three sections that will be coming, like ACC qualification, foundation level, diploma in IFRS. In case somebody, basically this is mainly done by people who are not ACCA but wants to do the IFRS, the International Financial Reporting Standard. I think you'll be hearing soon about this financial reporting. This is mainly for financial reporting subject, which you'll be studying in all three levels, even right now at the skill level and also at the professional level. So this is ACC qualification, and basically you just click on it, and this is all the subject you basically get. Once you click the relevant ACC qualification, and this is the subject we are right now reading. In case you want to, check any other resources for any other subject, so this is there. Business and technology, just click on that, and once you get on business and technology, you'll see that there are many like getting started, what is ACCA, what is introduction to business and technology, examining team guideline. It is very important. I will suggest you to go through it. I'll not go through it with you. You can go through it, and if you have time and you feel that there's some confusion, you can ask me. This is the syllabus, and this is practice test. Once you basically prepare yourself and you feel now you need to check like whether you can appear for the business and technology paper, so you can go here. And this is technical article. This is specimen exam. This is similar to what practice test is. And this is technical article, which I wanted to draw your attention to, and which is very important. You'll find for every subject, there are going to be technical articles. Now, what is technical article? They are ACCA members who basically writes about a subject and they post it on this, like based on which subject they are referring. So based on that subject, they basically post this article, and after basically approval from the ACCA, basically who manages the AFC website, once they approve it, this basically comes to the in this section. So you'll just click on the technical article, and I'm not sure about the this applied knowledge level, but at the skill and professional level, I would recommend you to go through this technical article, whatever paper you're referring. It is very important because these are very detailed discussions about some certain topics. So this will always be there. So at the skill level and at the professional level, I would definitely recommend you. This is my 100% recommendation. Just go about it, because many times question come from this technical article. In case of applied knowledge, because it's mostly based on like MCQ and multi responsive, so they can ask any part. So I think you have to understand the concepts entirely, but definitely this helps you build your concepts, as well as this actually helps you basically just get an advantage or in the exams in case of skill and professional level. Because what ACCA wants, because it wants to encourage students to actually read this article. It actually not every time, but actually more often asks the questions from the technical articles. And sometimes ACCA examining team actually points out that they feel disappointed because students have not read the technical articles. You are going to be professionals, so you are supposed to read technical articles, not only from ACCA, from other bodies that actually issue some technical article about any particular subject that you are interested into. Okay, so this is what is the overall agenda. So right now, organization, this is about the structure. There are many technical articles like internal control, Mintzberg's theory on organization. We'll be discussing this in basically chapter 6, like business structure of the organization. But more or less you have understood that organization, but this is about structure of the organization, like what are the functional levels, like the hierarchy of the organization, that will be we covering. And for the non for profit, there are two technical articles, though I have basically covered like some of the part I have covered here in the PPT that I have given here, and I have also discussed it throughout, like whatever points I can recall. But even then, the institute, the ACC institute, has given two technical articles, not only one. So I would definitely recommend you to go through these technical articles whenever you have time. Though in case you cannot go through them because you feel you are already too much occupied with your other studies, so no worries. Whatever we have discussed in the class itself is sufficient, but still as a learner, as a professional, I would always suggest going through these articles. This actually provides an advantage. And because we are right now running a live class, so if you read these technical articles, you can basically ask me a question in case you have a doubt, though I will be available later on also. So please use this. ACCA wants you to actually go through this technical article, so there is a reason that they want it. So please try to go through it. Any topic you feel like that interest you. And this is not only for business and technology, this is for also other subjects. Like if I go back to study resources, you'll see that I go back to ACC qualification, there are other subjects that you may or you want to read about. Okay, hopefully that part is clear. Any questions about this? If we do ACC, then we can do diploma. Basically, if you do ACC, why you are doing diploma IFRS? A diploma IFRS is basically already a subject. Basically, it's about accounting related to financial reporting standards. Basically, once you do accounting and reporting, basically there are two terms: accounting and financial reporting. Accounting will always be same. Debit and credit will not change. Okay, but what will change is the way you report the financial statements. You can report a financial statement in a way, I cannot report a financial statement in a way. So there's going to be a standard. There has to be a standard that large public does not get confused. Okay, what is the right way of which financial statement are the right one? So that's why basically the ACCA body is actually part of this issuing financial IFRS basically standards. Basically issue this body is basically part of issuing standards. So this is basically covered in your subjects, like financial reporting at the skill level and strategic business reporting at the professional level, and this is covered in very depth. So don't worry. I don't think that once you complete your ACCA, then you additionally do. Diploma IFRS is basically done by people who are basically not from ACCA background. Mostly CA do, many CAs actually do diploma IFRS, because in India, we have Ind AS for accounting standards. Accounting standard is for small company, Ind AS is for big company. Just for a generalization, technicality are there, but simple version is accounting standards. There are in India, and then there is India's, which is basically somewhat an adoption or somewhat basically a convergence of to the IFRS. IFRS is basically is a general accounting practices that is covered most of like 170 countries, but each country adopt them according to their need, and that's why they basically make their own standard based on that IFRS. Okay, hopefully that is clear. If you want diploma IFRS, I would not suggest. If in case before professional level you want to still do it, that's your call. You can do it. That's completely fine. It does not add any value though. I'm not sure. Like if you are doing ACCA, then why do you need to do diploma IFRS? But you can do anyway. You can check like there could be an advantage to a company like who's basically looking for a diploma IFRS certificate. But I don't see any other advantage other than that. Okay. So any question on not-for-profit organization right now? Because we have already covered, and I wanted to show you this link of like, this is a technical article, and what I have written here is basically from that technical article and whatever we have discussed right now. So any question on this? Or you want to read first if you haven't done so far yet? Because so far we have been discussing what are the organization, what are their purposes and all that stuff. So we have been, I think this we have discussed them in detail. So that's why now I don't want to spend more time on them, and unless you have any questions about this. Fourth and sixth point. Okay, fourth point is their objective usually includes some social, culture, philanthropic, welfare, or environment. Yeah, I think fourth point is the most common point. Okay, I think first, second, third, fourth. Okay, this is the fourth one. Social, culture, philanthropic, welfare, environment dimension that would not really readily provided through the working of the market system. Okay, like cheaper medicine, like cheaper transport. Do you think that anything that require cost, the market would provide you at a lesser cost that is costing to them? Or not for profit? Yeah, governments, railways, these are basically examples of not for profit, that like what we have discussed. Like these are not for profit organizations, basically railways, school, hospitals, these are basically not for profit organizations. So what I was saying with this is that market basically does not provide you anything free of cost. Basically whatever cost market incurs on anything, basically they basically create a margin of their profit, and then basically they charge you. But in case of not for profit organization, their main objective is not to earn profit. Their main objective is to provide the services to the local public, to so that everybody like the necessity, right? Okay, like what we discuss is life to livelihood. So these are the things that government tries to provide, and that's why we have public sector, and that's try to provide the social welfare or schemes that actually helps individual. Will price of subscription change for the next year according to a surplus or deficit? See, that is related to the NGO, and that depends. Like NGO incur loss, they incur a lot of losses, and whether or not their member would agree for the price of subscription. So the question is like whether price of subscription would change for the next year according to surplus or deficit. That surplus or deficit that basically incurred by the NGOs. Not for profit organization, as I mentioned, does not necessarily mean that they do not earn profit. They can earn profit. So they can be a profit in their not-for-profit organization. It's just that their main aim is not to earn profit. Railways have their own balance sheet and P&L statements. So membership is basically for the NGOs. Hopefully that is clear, Omar. Okay. And I think for 6 points, some people also ask 1, 2, 3, 4, 5, 6. They will self-financing through may generate surpluses. This is usually retained by business as a further source of income. Unlike profit maximization, board strategic objective but not permanent and not to change over time. And the performance often assessed based on measure of effectiveness and economic efficiency. Okay, there are 3 points that I want to. NGO can be an NPO. Will NGO can be an NPO? See, will NGO can be an NPO? As I mentioned, there is no ownership in the NGO. They are basically, I think there's some confusion about NPO and NGO. NGOs are basically charities that basically work for a cause, that basically ask people to donate, that basically ask people to volunteer. Not for profit organization is somebody where a play is basically an organization where people will not work for free, even if it's not for profit. You do not work for government for free. Okay. So that's how you basically spread the not-for-profit organization. Now, the sixth point, basically, what it's trying to say is that, as I mentioned, that profit earning is not the main activity of the any not-for-profit organization. If they earn the profit, that becomes incidental. Incidental means that that happens by the activity. The main objective was not the profit but the activity, but because the activity was so successful that it actually made a profit. Now, not-for-profit tend not to change over time. The objective of the not-for-profit organization does not change. Like many organizations changes their objective. Like there are companies which I want to give example to. Like there have been companies which were earlier in the steels company, but later on they changed their objective and they actually IBM is a good example. IBM earlier was actually based on designing softwares, but actually later on IBM shifted its strategy from designing software to basically consultancy. Basically what IBM thought that, okay, we are good at what we do, so and we see that the is higher, the designing software is actually highly competitive, so let's go into the consultancy. So they change their objective. But in case of not-for-profit organization, they generally don't change their objectives so often. What they have been formed for, like railways, like hospitals, like schools, they don't change their objective. Okay, now we'll start charging fees. No, this is not how they do. Or their railways is not going to be like, okay, now let's invest in aviation. Enough of the railways. So I think this is clear. Yeah, I think Shivraj, what are the examples of NPO, like school, charitable trust, like railways, like hospitals, like or what else I can give you about NPOs, not-for-profit organization. I mean, in the book they have given like many examples for not-for-profit organization. Let me check. Like there are many examples for not-for-profit organizations. No, game clubs are hard to define for not for profit, very very hard. Or they are more like basically any club are run by an individual. Sports club, sports clubs is a good example. Sports club is a good example for not for profit. The main objective of sports club is to promote sports. There are private sports clubs that actually run revenue, so they are not for profit organization. Some sports club actually sell their membership, so that, like gyms, some sports clubs also, like gyms, they basically earn revenue and generate profits. But in case of some sports club that actually promote sports, like some category, they are underprivileged sports which are not foundation mainly falls under foundations. Depends on which foundation you are referring, Shivraj. Like which foundation you are referring, that will depend. As I mentioned, not for profit organization will always be something that is there basically to serve a cause, but that does not necessarily mean that they are not earning profit. Okay, they are going to serve a cause. In case of an NGO is always going to be for basically they are going to ask people to please donate us so that we can fight for a cause. We can actually there's a social problem that we can address. So let me see, because the book is this whole thing is based on UK, so they have more given like examples of UK country. Okay, mostly examples. I'm not. I thought foundations are mainly NPOs. Yeah, depends. Shivraj, depends. As I mentioned, like charity trust, they can be NGOs, but they can also be NPOs, not for profit organization. But depends on like what its main aim, how it's generating revenue, how it's basically whether it's incurring cost, whether it's paying salary, lot of stuffs. NGOs pay salary, but mainly out of the donation, not by through any income. Okay. Is ISKCON Temple an example of NPO? No, I don't think. ISKCON Temple is a NGO. Most I feel ISKCON Temple is an NGO. It's not an NPO. It does not run any business. It does not, it promotes the religion. It's promote a particular, basically, trade unions are NPOs. Not for no. Trade unions are not NPO. They are not generating any type of revenue. They are not asking for any type of, any donations. They are not. Trade unions are not NPOs, neither NPO nor NGOs. Isha Foundation is actually an NGO, not an NPO. Isha Foundation is an not-for-profit organization. No, basically what happens is why you mentioned, that's a very good example. Why Isha Foundation you actually consider NPO? Because you thought, okay, Isha Foundation is selling goods, is also selling stuffs, and their they are also giving charities. Basically, why Isha Foundation is not an NPO? Because there are different units to Isha Foundation. Some of them are NGOs and some of them are NPOs. Yeah, Shivraj. Basically, the thing that you're mentioning, they are making profit. That part is their NPOs. But the Isha Foundation that actually started initially, that was an NGO. That is how, basically, that is how you differentiate. Why you are getting confused now, I understand. Basically, you are actually seeing that there are organizations that are NPOs that actually run businesses, that actually trade, and they also make profits. But they are also part of it that actually is for a cost. Because if you see, Isha Foundation is not a single foundation. They are units to Isha Foundation, and some of them are related to NPO, and some of them are entirely, as if you say Isha Foundation as a whole, that's an NPO. Because overall the foundation is basically about selling the subscription fee to the members, and then they basically get the course of like they get a course about like meditation and all that stuff. Yeah, inner engineering, right. So basically a meditation course or whatever, so they are basically selling these courses. So they are basically NPO overall. But some of the units of the Isha Foundation is also an NGO that actually works for the betterment of the society. So that you have to see which part you're referring. I think now I think now we are clear, right? Okay, so let's move to the next one. This is cooperative society. I think I have given first before going to, yeah, Amul, IFCO, Mundra, cooperative groups. Okay. I've given one, Spain and United Kingdom. Do you want to read this cooperative society? We have cooperative banks, like how NPO can be unincorporated. Shivarsha, I'm not sure. Like I haven't understood your question. So you guys are reading this, or please read it and let me know. And till the time, in case anybody else has any question, please ask. Unincorporated. Okay. Where I have mentioned this, unincorporated. Many objective differ, typically don't have external shareholder, provide risk. Fifth point. Okay. Not for profit is in both public and private sector, and they can be established as incorporated. Oh, okay. So now I got it. So incorporated or incorporated body means, incorporated body is basically legal body. Incorporated and unincorporated body. So many NPOs actually are registered companies. Yeah, I'll tell Sankalp. So basically here what it means that many NPOs are also registered company, many NPOs are not registered company. So incorporated and unincorporated bodies basically means that legally registered. Like you can go on and basically create some individuals and start calling yourself an organization, and you still can earn revenue, and then basically it does not get registered anywhere. But if you get registered, you'll be incorporated body. Okay. Okay, how cooperative society promotes education? That's a good question. How does it promote education, cooperative society? Please read, let me know. I'll cover this. Just a moment, huh? Please read in the meanwhile, just a moment. Okay, done reading. Okay. Yeah. I'll explain. So let's discuss the cooperative society. So basically, normally a business is basically where owner takes away the profit and employees are paid by the salary. Okay, this is how the normal business work. But in case of cooperative society, now the concept is little different. They say, okay, just because I own the majority, but just because I have the basically largest money invested in the company, doesn't necessarily mean that I should only avail all the profits, because you guys are the one who is basically running this company. Without you, this company will not be able to run. So it is ethically right to basically share that profit with you. So that's why this cooperative society actually came into. So why Amul is a great example of cooperative society, because many farmers actually sell milk to the Amul corporation. There's a Amul basically factory, and many basically unit which is basically located nearest any village, and every person who's basically selling the milk will basically go to the Amul and they basically sell their milk. And for that they basically get some salary, or I'm not sure like they get any salary or not, but they are basically a regular seller to the Amul. But because they are part of this Amul group, they also, once Amul makes a profit, that also gets distributed to the, the people who are selling them the milk. So this basically setup is in a way basically distributing the profits that any organization make. Cooperative society basically don't consider it as an NPO, and cooperative society can be an NPO as well. But cooperative society, just try to understand from a point of view of business, that cooperative society, what is there for is to the welfare of its members, the workers or the customers that is work. When I say customer, we are drinking the milk. Like let's say farmer, not we are not part of the Amul society. So yeah, the workers that basically work in the work in this society, with the cooperative society, they basically get the ultimate benefit of the, the profits that it generates, because that is ultimate somehow, like in some portion is distributed back to the workers there. In case of a normal business, what will happen, that you will incur expenses, the revenue will get generated, the expenses will get managed from the, from the revenue, and then what will happen, whatever the profit is left, that will be taken by the owner himself. But in the case of corporate society, this is not the case. And what happens here is, like this is an open membership case. Like here it is mentioned that anyone can join, anyone who's working there, anyone can be a part of it. What does democratic control means? See, in case of a company, they are shares. So a individual can basically own multiple shares, and basically an individual can become, own majority of share and then basically take away entire profit. But in case of many cooperative society, it's not true for every corporate society. In case of many corporate society, they basically decide, okay, one member will have one vote. It's not that, okay, you have majority of money. That is the basic idea of cooperative society, that you have the majority of money, so you take away all the things. But many cooperative society don't work under that. They say, okay, no, share pace is okay, we are investing, you also get a part of the profit, but doesn't mean that you get a better share because I'm investing money. So some corporate society work on that ideology, but some cooperative society work on the democratic control, basically one member one vote. I hope this is clear, like what is mean by democratic control. Promotion of education is basically not for the society. Promotion of education, it means is the like the participants of the society, like the cooperative society. The members of the cooperative society, they basically, fund the money, like promote the education of the person. So that's what here promotion of education means. It's not like cooperative society is going place to place and they are, promoting education. No, it's not that. It's just the promotion of the education of their members, like any financial help, or basically the task that they are doing. Let's say in case of Amul, so they basically, have this research and development team, which basically reaches to each village and basically teaches them like how better they can basically improve the production of the milk, like what care needs to be done in case of, cattle. So that's basically promotion of education means. Social goal is basically, let's say the idea of Amul is basically milk, right? The idea of Amul is basically milk, and also the distribution of profit. with its members. So that's basically what the social goal means. Is don't try to confuse it with the NGOs or NPO social goal. This is not that. This is basically for the members. That's why it's cooperative society. Okay. Or any other question on this? I've also given, like, other than Amul, there's Indian Pharma Fertilizer Cooperative, and this is basically based on your book, like Cooperative Group in United Kingdom and Corporation Spain. Yeah, Sankar. This just like scholarship. Yeah, cooperative society basically promotion of education, basically just like scholarship. Right, rightly said. So are we good about this? See, yeah. So see, basically it's 9. I know, but we started late. Please try and understand. The lecture that will finally get here will be only 2 hours and 45 minutes. So let's try to cover as much as possible, because we have not covered our first chapter after 2 classes. So we are going little slow, but no worries. No worries. We'll speed up later on. And when I say speed up, doesn't mean that we'll leave any concept. We'll try to cover as much as possible. But yeah, there's going to be some homeworks also. There's going to be something. So yeah, we are basically little slow right now, but we'll basically speed up in the upcoming classes. And be sure that every concept will be cleared. And in case, I think about the extra classes, I'll first talk to the VGN, but I'm planning, like, in the in the month of May, we'll be taking like couple of extra classes so that we can speed up the process of this batch. Okay. But first, I'll be, is there a limit on number of members in society? No. No. Amul has thousands of thousands of members, thousands. I mean, I'm not sure I'm saying correct, but thousand. I think lakhs of people are part of Amul's organization. There's no limit on members in society. Okay. Finally, we are at stakeholders. Is there any question, or should I just start discussing stakeholders? Okay, nice. So can anyone tell me what is stakeholder and shareholder? Before that, I just get back to old clip so that you don't cheat. Shareholder and stakeholder. I think you might have heard shareholders, but I'm not sure whether you are familiar with the stakeholder. Broader concept, rightly said, Pratiksha, but how? Yeah, Sankar rightly said shareholder, the owner of the firm, right? Rightly said. Stakeholder gives stake, example, money, shares. No, actually, this is not correct. Basically, shareholders, I think you wanted to say about shareholders instead of stakeholder. If that is shareholder, then it is correct. Stakeholder have stakes in businesses such as creditors. Rightly said, Omar. Can you name any other stakeholder, like who does not have any money involved? Let's see whether you understand the concept of stakeholder. Yeah. Okay, Achal. Yeah, then it was okay, correct. Okay, I think I'll explain now. So basically, see, somebody has rightly pointed that stakeholder is a wider term than shareholder. Shareholder is just one of the stakeholders. Stakeholder basically is a broader category. When you say, even government can be a stakeholder in a company. When we say stakeholder, basically it means for an organization, but because we are discussing business, so we'll mostly refer the company, but don't consider that stakeholders are only for company. Stakeholder can be in any organization. We have discussed many organizations, so stakeholder can be for an any organization. Okay, so we are discussing from the point of view of a company, which is basically for mainly for the business. Okay, so Stakeholders, even government has stakeholders. In case you get confused, government has stakeholders, NPOs have stakeholders, cooperative society have stakeholders. So stakeholder is basically a wider term than shareholders, and shareholder are who basically are the owners of the company. When we say stakeholder basically, if you break it down, the stake and holder, you will basically means that they are people who have stake. And stake, what do you mean? Interest can be of money, okay, and not necessarily of money. Let's say there's a road to be constructed, okay, so there's money involved. A company will be basically, road construction rights have been given by government, and a company has basically received the contract to basically build the construction road. So definitely company is basically, in case of company, the project that it has received will basically generate the revenue for it. Now for the company, try and understand, in case of a road construction, from a point of view of company, who are its stakeholder? Definitely they are owners of the company who wants the company to be successful in the project so that they earn profit, and that profit basically goes to the the owners of the company. So that is one thing. But what about other people? And who are the other people who have concern in that road construction? Like, they are employees. Employees are also part of the organization, so they have also the interest in the organization. They just want stability. First thing they would want, that the company does not fire them. Second, they would want there are better working conditions, right? They are working for a road construction, so that is requiring a lot of effort, that maybe they need to work under the sun. They could be very damaging conditions, not very healthy conditions to work in. There could be pollution, there could be a dust and all that stuff. So what are the healthy conditions that company is ensuring that it employees receive? So stability in terms of job, and then health and safety also. And let's say we have covered the employees and the shareholder. What about the banks that basically lend the money to the company? Because company need finance to basically build the project, and whatever capital it has used that money in that project, but now it needs additional capital. So there will be banks or lenders. Let's say we normally borrow money from bank, but there are also other lenders. So what they do want, would they want, okay, company becomes because company provides a healthy condition to employee? No, they would not concern themselves. What they would concern themselves is that whether company is able to pay back their loan. And how do they make sure that? Whether company is generating enough revenue, whether company have sufficient assets with them. See, now since I changed the stakeholder, bank have their interest. So they did not basically, bothered about the, other stakeholder interest. What they basically cared about, their own interest. So let's say company, in order to, make profit, company had to cut cost. And for that, company had to, cannot provide the healthy working conditions for employee, or even cannot, provide the stability of job. They have to fire many people. But would bank actually bother? Not actually directly. Why? Because if bank actually sees that, okay, this actually makes company profitable, they would not be concerned. All they are concerned is, okay, I'm just getting my money back. I have assurance, okay, company have sufficient assets. If company is not able to, generate enough revenue, I'll sell the company's asset, because I have a right. As a lender, you basically get a right over the owners. That's also a case that normally lenders get a right. Borrower, basically the people who lend you money, who basically provide you funds, basically get the right to basically recover that money from you before the owners. Owners are the last person who basically receive the money. Okay, now let's talk about banks. We have internal, and okay, what about customer? In case of road construction, they will be public want a good condition road. Even the government is somehow involved, because government has given you a contract for the purpose of public. So let's consider government and public as a single in case of customer. Yeah, I'm coming to it. I'm coming to Shivasha. Let's say I'm talking about customers. Customer, in case of a road construction, who get benefit of a road proper constructed road? People, general people, because the transportation goes not only by companies but also by individual, by their car, by their vehicle, public transportations. So what they are concerned about, they are concerned about the road should be safe. The road should be properly built. It should not be weak, that any rain can make the road weak, or there are cracks, or there are holes in the road. right? So their interest is that the road is properly constructed. They are not bothered about how much money company spends, because the responsibility is with the company. Now see, the owners want the company to generate profit, but in order to generate profit, they either have to, extra earn extra amount, but in a construction note contract, the amount is always fixed. So they have to reduce their cost. But in case of public, they don't care about the cost. They only care about whether we get the well constructed road or not. See, are you able to see this? That each stakeholder means they have an interest, and they are different groups, and they all want different things. And because of that, there is some clashing happening, and sometimes they do not even care about what the other stakeholder is facing. They don't care. They only care about their stake. That's why they're called stakeholder, because they only care about their interest, right? And there could be some clashes also. Now in case of government, let's not talk about government as a customer. Let's talk about government as a regulator. Let's say government actually is interested whether company is complying with the laws. Like what are the laws in case of construction? There could be, safety and measurement law. When you are in a construction site, there is requirement that you need to, ensure that safety of the people that are working there, ensure the safety of the public that is going from there, ensure that, environment does not get polluted because of that. There are many like there are certificates requirement, proper engineers certification that the road is safe to be traveled with. So there are many regulation requirement because of that. And if you understand this, you'll see that because of all of this, the government expect that the company complies with the law. Company actually shows its true income and basically file its taxes. So government is a different stakeholder, right? And in case of government, do you understand that government has the power to stop the activity of the company that is constructing road in case the company does not fulfill the requirement, does not fulfill the law, and government notices it. So government can actually prevent that company to construction, and in case also recover the damages in case government wants. So there's a lot of power with the government. And if you understand, there are other stakeholders also who have power, like bank have a lot of power. Bank have a lot of power with with the company, because they have landed the money, so they will ask a lot of things from the company. There'll be so many stipulations by the bank when lending the money. There's actually covenants. This is actually called covenant. When bank actually put conditions on company when giving loan, they can ask, okay, this particular asset belongs to us only. If in case you do not meet any requirement, we'll sell that asset only. And that asset basically is mortgaged. Or basically in case of owners, they can have basically certain power. In case owner can remove the directors. Directors are basically who run the company, and owners are not satisfied with the performance of director because they feel that the project is taking too long, why it has not completed. So in case of general meeting of shareholders, they'll decide, okay, we'll not keep you as a director. So they also have power. But in case of general public, tell me what power general public have. Can anyone tell like what general public have as a power, has a power as a stakeholder? In case anyone can guess, or I'll tell. Don't worry. No worries, no worries. That's why we are understanding. Yeah, one way to put it, Brinda, right? One way to put it. File a complaint against the company, but with whom, Brinda? If I ask you, file a complaint against the company. That's one of the ways. But with whom and why? Why you will file? The government. Okay, so I'll clarify. So basically, what public has, like I said, like public has an interest of basically a consumer code. Okay, what product you are selling, basically, Sankalp, in this case. So basically, let me clarify. Companies constructing the road, and as a public, what you are interested in is a well constructed road, right? So they could basically feel that either the road is not properly constructed, so they, as a, as you said, that they can file a PIL, public litigation interest, PIL, public interest litigation, sorry. And then they can be actually also a forum, like they can also protest with the government. Like public has a power to protest. They'll protest to the government, hey, who did you hire to basically do this project? You have hired to the wrong company, and we, okay, you are the party right now, because every government is run by a party in any country. So they'll basically say, okay, you have basically given this contract to this company and they are not doing good. please make it good. Try to either make the company to construct the road well, or basically get another company, but we want the road constructed to be properly. In case you do not, will not vote you in the next election. Public opinions matter, remember that. And public, basically if public protests are very large, then their opinion matter a lot, and then public will government will do anything to basically make it correct. So public also have power, a very significant power, but that is very hard to invoke. But once it gets invoked, many institutions get swayed away with that. So public also has some power. So are you understanding that they have interest, they have certain level of power. And I'm not going to discuss the agency right now, because we are right now so basically into the fluency of this. So just 5 more minutes. I know we are 9:15, but because we started late, so it's just now offset it. Just 5 more minutes, because I think we are on a very great clarity of the concept. So if you allow me just 5 more minutes, are we good? Just 5 more minutes. I just want to discuss some metrics with you. Or is it too late? Okay. Just 5 more minutes, huh? 5 more minutes, promise. So basically what I wanted to say here is, like, we have discussed, like, there is some power and there's some interest, and every group has their own interest, and they would not bother about the other interest. And it also can happen that one person's interest can actually conflict with another person's interest. Like in case of bank and employees, this could happen that banks want insurance that there is a sufficient profit to pay their interest and loan, and employees want that safety working condition. But in order to have a safety working condition, company have to spend money. So there is a conflict. Okay, so let me just quickly tell you about it. This is simply I'm just skipping it right now. We'll discuss it in the next class. This is basically a conflict of interest. Conflict of interest means that my interest is not basically in line with the other group's interest. And it can be shareholder, it can be employee, it can be banks, it can be basically government. There can be various parties which can have a different interest, and their interest can actually clash. Like in case of a company, let me tell you, that company wants to continue with this construction project, wants to adopt more construction project, because the director of the company feels, okay, we have a lot of scope. But the shareholders are not comfortable. They feel, oh, why are you investing so much in the construction project? Why don't you go constructing the bridge? Why you are just only constructing road? Just go on constructing bridge also very profitable. Why you think? But directors feel in a different way, owners of the means shareholders feel in a different way. So they also can have a different point of view, and different point of view basically means conflict of interest, because directors sees that there's an opportunity. The shareholders feel, no, there's a risk. So there's also a conflict of interest, because directors are there to ensure that their stake is basically prioritized. They basically get a good bonus, and in order to get a good bonus, they have to ensure that there's a profit. And in order to ensure profit, they have to make decisions that actually generate profit, and that could actually lead to making risky decisions. But shareholder are like, oh, no, you don't make any risky decisions. Don't only go on basically constructing roads only. Try to diversify, try to reduce the risk a little bit, and try to also construct the bridge. In case a competitor comes and captures the entire road construction project, then what will you do? So shareholders are basically concerned that the taking too much risk can be a problem, whereas director feel, no, taking too much risk is not a problem, will generate a good revenue. Because what director is interested in, if it generates a profit for the year, he'll basically get the bonus out of that. So that's basically a conflict of interest. That's we have already discussed the conflict of interest between banks and owners can also have a conflict of interest. And we I'm just giving you an overview. I know we cannot cover all this. We are not covering all this, but I just wanted to tell you that each group has some power and has some interest, and that level of interest and that level of power basically makes for an business to decide, like, whom to listen. Because you have to listen to some people. It's very important for you as a business. Do you have to listen to owners? Do you have to listen to lenders? Do you have to listen to employees, or to the government, or to the public? It will will basically depend. Company has to decide very carefully, and this is very important for any organization, even in case out of a company, even in case of an NGO, even in case of an NPO, even in case of a government also. They have to actually decide like which stakeholder they prioritize, because see, we have seen that there is always going to be a conflict of interest. There's going to be some conflict of interest. This is in a business, this is very natural. So whom to listen, right? And whom to prioritize, that will actually, that's why there's a matrix called Mendel's matrix, that basically this matrix is basically provides an understanding of who has the power, who has the interest, and how much they have the power and how much they have the interest. And based on that, whoever is most powerful and whoever has the most interest, we will basically listen to those, and whoever has the least power and have the least interest will not basically bother about them. This is what how the organization basically think about it. Let me know if whatever I have generalized is clear to you. We'll cover all this because we are late and we were a little slow, so that's why we were not able to, but at least you get an idea. Okay. And I want you all to basically read this because I have shared the PPT with you. So I want this stakeholder clip with you to basically read by yourself, so that basically in the next class we do not spend much time on reading. We spend time on basically discussing question. But even then I'll basically discuss this. But I want you all to basically read this through this weekend. And also there's one homework for you in case you get the book. In case not, we'll solve we'll do this in class. Yeah, sure. Yeah, Omar, I'll share the PPT again, no worries. So basically the homework is try to do the chapter 1 essential questions. Like there is going to be a question reference in the back of the book. In case you don't find it, don't worry, I'll share. There are going to be questions, so try to solve like at least 4 to 5 questions. Like if you have the practice kit, try to solve like at least first 5 questions. I know you might not be able to answer that, but that is okay. That is why I wanted to try. At least you see like what kind of questions are about to come. So try at least 5 to 10 questions, and there are topics that we have not covered, and still I want you to apply, try those. Okay, so please try to attempt. I know many of you will not do, but those who actually want to see what kind of preparation they need and what kind of exam they are into, so please try to see the questions. Don't try to look at the answers, please. The purpose I'm giving you the questions without even completing the chapter. There's a reason that I wanted to go through it. Okay, so thanks everyone. Thanks for bearing with me. And that's it for today. I'll be sharing this PPT with you all. Okay. Any questions or are we done? Sure. No. I think you're confusing. No company can decide construction. Construction is a contract granted granted to a company by a government agency. See, construction or basically this is a privatized sector by the government. So government basically, any person can construct. Depends, but it is not a public needs or not. That is a very complicated question, Shivarsha. There are 2 to 3 things that you have mixed up here. In case you want, I'll explain. Let me know. Public, basically, if you say company respond to their stakeholder, that is that I can basically, that is a correct question. But in case you are saying based on the public needs and requirement, company receives a construction contract, no. Any company can receive a construction contract. Even a private, like let's say you have a lot of land, you hire a company to construct a building. So that's not how it works. You can hire any construction company to build that building for you. In case of roads, because it's a public, roads are basically for public, so normally government grants the contract. It's not like public needs and requirement. I don't think that plays a role there. Yeah, Pratiksha. I've actually asked the VG team right today. I have not received the response. As soon as I get it, I'll tell you. But to be honest, what I know, what I understand is that I don't think that should matter. After September, all the changes will be applicable. So before that, I don't think that there should be any problem. But I'll confirm it. But most of I'm confident that this is how it is. That changes will only be applicable from September, not from June. I don't think that changes are from June. Okay. Okay. Sure, everyone. We'll try to see based just one thing. I think there are very few participants. Based on this, we'll try to do the to expedite this batch. We'll try to takes a couple of lectures in the month of May. Maybe not in month of April, but from the May month we'll be having extra lectures. But that would basically would require a lot of efforts from my and your end as well. So let's see how it goes. Okay, thanks everyone. Have a nice day. Oh, sorry. Good night to you all. Okay, bye bye. Thank you. Thank you. Bye bye.